Today, I'm going to be teaching you how to become a master level day trader by taking 6 years of my work and over 300 videos and condensing it down into this one super video. So no matter whether you're a beginner at day trading, wanting to get into day trading, or already making a full-time career income, this video is going to help you further push yourself, refine your skills, and teach you everything you need to know about day trading, charting, and how to do this as a career. Now, there's a few things we need to discuss before we begin. This video is taking over 300 lessons. Some of these lessons are 3 hours long, and condensing it into a one series video where we're going to cover each topic for maybe 1 or 2 minutes or possibly even less, because we have a massive list to go over in this video. So please understand there is a lot of knowledge and a lot of depth in each of these topics that we discuss, a lot of use cases, a lot of examples, a ton of material I go over on my channel. And if you want to learn about any one of these topics in depth, we have 2 ways you can do it: on my YouTube channel or on my day trading software that I made, which is called Chart Raiders. So please understand and respect the fact that we are only spending a minute or 2 on each topic. So they're going to be vague yet helpful. And again, if you need to know more, go and learn about them separately outside of this video to continue your journey in learning. Now, here's a full list of the topics that we're going to be covering in this video so you can have an appreciation and understand the depth of knowledge that we're getting into. Now that you've seen the list of what we're covering, I want to give you a tip on the best way to study this material as we go through these topics one by one. It has been proven in science that if you cram for a test at the last minute, or if you shove everything in one session, you are not going to learn properly. Imagine your brain is like a candle in this regard. If you cram everything in, your brain is a candle. It will remember and imprint these ideas in your head until the candle wick runs out. So for a week or 2 weeks or 3 weeks, you may remember these things, but they'll quickly fade off after and you'll forget them. You will need to come back to this video multiple times. And my suggestion to you is to break this into small learning groups and then go and practice what you've learned. Find the errors in what you've practiced and then sleep on it to get that information solidified in your brain. So you're going to want to do lots of short sessions. If this video ends up being 2 hours long or 1 hour long, let's use 2 hours as a mark. If this video ends up being 2 hours long, you're going to want to probably do 4 30-minute sessions to learn all this material properly. Take a break, learn it, come back. Take a break, practice it, learn it, come back. Break it into multiple sessions so you can best learn this knowledge without having those imprints leave your mind. In this video, we'll be focusing strictly on technical analysis, which is the marking of the charts, analyzing the data, and having the highest level of accuracy humanly possible. Now, I want to be clear on something. There are other quadrants in day trading that can make us succeed or fail, such as mental analysis, risk assessment, procedural analysis, comparative analysis. Those 4 topics would each independently need their own in-depth guide like this video, as I've done hundreds of lessons on these other topics as well. So please do me a favor, subscribe to the channel, share this video, comment on it, and like this video. Do those 4 things, because if this video does well, I am going to make a guide, an in-depth series and guide exactly like this on all those other 4 quadrants of day trading in order to help people the most and best I possibly can. Now we're about to start getting into it, so take a pause break, get your water, get your coffee, whatever you need to be ready for this video. And I'm going to be turning off my camera for this because I want everybody to have absolute focus on the charts and not on watching me visually on camera as they're scanning back and forth from one piece of the screen to the next piece of the screen. Now, whether this may not be great for video analytics, that's fine. It's not my concern. My concern is that my audience intakes this information the best possible way. So again, the camera's going off. I want you to be actively participating and listening to the content. Once you've learned this content, I want you to take frequent pause breaks, start marking the things we talk about on the charts, and then I want you to look for errors in your information and use this video to correct those errors. Now, this is what I expect from my audience. This is how you're best going to learn. Cameras off, follow my instructions, let's boogie. All right, we're going to be breaking this video up into 4 sections: beginner material, advanced material, pro material, and master level material. And in each section, we're going to focus on information that's relevant to that level of material. So to start with, we are simply going to go over the basics and beginner level knowledge for those of you who are brand new to trading. And the first thing we're covering is accumulation and distribution. Now, before we get into speaking about that, I changed the color of my candles to white and blue. This is a color schematic I designed 6 or maybe even 7 years ago in the public, and it's kind of adapted since then and everybody uses it now. So this is, if you were ever wondering where this color schematic came from, if you're seeing in your day trading charts, I'm actually the one who invented that. You can go back, check that in my videos, going back 6 years ago now to some of my first videos published. And then I just kind of caught the industry on by storm because I think people realized with the idea of that I created these original colors as white up and blue down of pure neutrality, instead of coming from a place where we look at red and green candles and we're pre-programmed to see things in red and green, like stoplights as green or red as stop from a young age. It has a psychological effect that I just don't appreciate, as I like to keep my charts extremely neutral. So again, white up, blue is down, or white is accumulation, blue is distribution. Now, accumulation and distribution, our first topic, is that candles will either accumulate or they will distribute. They can accumulate in a short form like this, where you have kind of an elongated time period where candles will accumulate over time before a big movement up, or they will continue to distribute and take a move down before they move down. But typically we refer to accumulation and distribution as accumulation going up and distribution moving down. So just a quick way to say we're moving up or down. Well, are we accumulating or distributing? Levels is the next thing you're going to want to learn. And for the levels, we use what's called the horizontal ray tool, and that is it. So you mark a level on your screen like this, and this is where we expect price to have a certain action or reaction. For example, if I was to just pick a random spot and mark this one as a level here, you can see that price is constantly hitting this level, and therefore we would say we are using a level on the chart. Now, with levels, we also use trend lines, and these are really the only two tools we will ever use. You're never going to use indicators. You're never going to use anything that you're going to add other than trend lines and levels, and that is it. So we use the trend line tool for this, as you can see, and we simply pick 2 points to mark a trend line to, and that is it. Now, we're going to talk about trend lines in a second here, but before we move on to trend lines, we are going to talk about why we don't use other tools. A lot of people in the industry will use indicators, everything from MACD, RSI, a Fibonacci, Elliott wave. None of that stuff works. It is all just tools people have invented that do not follow the core rules of the science. Now, this science has been here since the 1800s in the charts. I have another video called How I Reverse Engineered the Markets, and the truth and reality of this is there is proof that I have broken down in my other videos. Again, go watch How I Reverse Engineered the Markets. There is proof to show that all of this information has been in the charts since the 1800s, since the earliest stock charts and data we have received have, and that information has never changed since. All modern day tools like Elliott wave, Fibonacci, they do not work despite what you think. I've been doing this for a long time, and people have referred to me as the best in the world at doing this. Please take my advice. Please heed my warnings. I have been doing this for a very, very long time. They do not work. The only two tools we will ever need is a level tool and a trend tool, and that is it. You may like to draw boxes as fancy annotations or markers on your screen to demonstrate something, but at the end of the day, these don't have any bearing on how we trade. Simply a level and a trend tool is all you will ever need. And by the end of this video, I will have you convinced, if you watch to the end, as you look at my accuracy and we go through some of the deeper, more hard set theories of how accurate you can get. And just as a nod to that, please realize I only trade 100x leverage with accuracy down to less than 0.05% when I take trades. And I've been known to have an insane amount of accuracy. And that's why people have gravitated towards me over the years. So please trust me. All this to say, not to brag, but just to prove the point, to say, please only use trends and the level tool, and that is it. If you're going to use other things, stop this video right now. Go learn elsewhere, because this is not going to be for you. This is extreme accuracy at the highest humanly possible level of day trading, and that is it. Okay. So when we draw trends and when we draw levels, levels either attach to a wick or a body of a candle. And we'll talk about later when we get to hold levels, which candles we use. And for trends, we only ever attach it to blue candles on the bottom side and white on the top. So if you're using a trend tool, no matter what time frame you're on, you are only ever going to use accumulation candles on the top. So if you were to draw a trend line up here, you would go like this, and you would go accumulation to accumulation right here, or to here, right? This one right here, or to here. And we're not focusing on accuracy right now because this would not be the right time frame or appropriate time frame for this chart. And we only use white to white candles here on the top and blue to blue candles on the bottom. So this trend line I've drawn would actually be incorrect. We would go from blue to blue, and therefore going from here to here, and then further going from here to here, and then here to here, et cetera, et cetera. And again, this is the wrong time frame, so they're going to look inaccurate, which I'm perfectly aware of, and that's perfectly fine. For now, we're just talking about some basic standards that we have to all follow. So distribution candles on the bottom for trends, accumulation candles on the top for trends. Pretty easy so far, right? Yeah, very easy. I'm glad we're on the same page. Now, targets. Targets are referred to in our industry as something where we are targeting a price. For example, if we were to buy this level here and we were going to target this level on the top, we would say, hey, here's our entry, right? If you can take your replayer tool here, you would say, hey, here's my entry, there's my exit. Or this would be your target for a long, and this would be your target for a short. So when we mention targets, we are simply referring to targets on the screen. And then the next thing we need to look at is timeframes. So we've got levels, we've got trends, we've got targets, and now we're going to talk about timeframes. Timeframes are the information that you will see each candle existing in. So if you were on a 4-hour time frame, that means each candle represents 4 hours of time. So for example, if I was to go to this blue candle right here and take that replayer tool off and just cut off the current candle, this 4-hour candle would have 4 1-hour candles in it. That 1-hour candle, which is this one right here, would have 4 15-minute candles in it. Or if I went back to that 4-hour candle, this would have 4, 8, 12, 16 15-minute candles inside of this one. So they are just time frames inside of other time frames inside of other time frames. And no matter what time frame you choose, all you are doing is compressing and extrapolating the data in that candle. So if I was to go to a daily, what would happen? It was to take 1, 2, 3, 4, 5, 6 of these candles and move them into one, because you've got 6 4-hour candles in a day, 6, 12, 18, 24. Right? So if I was to go to a daily, these 6 candles would be merged into one candle, as you can see here. And then if I went down in data, they would just further extrapolate on and on and on to get that information. Now, after time frames, we have something else called level adaptation. So level adaptation is when we are adapting our levels. And very simply as a name, I try to name these topics and these different things that we are going to learn about. I try to name them as self-explanatory as possible without getting too fancy, such as calling it the great money expenditure or whatever these topics are called. They make no difference. We just use basic, understandable terminology that's kind of self-descriptive to what it's doing, such as a trend line is a trend line. A hold level in the future parts of this video will be a level that needs to hold the price. Therefore, we call it a hold level. A break level would be something that needs to break a price. Level adaptation is simply when we adapt our level to the next expected result. So if we expected it to go here and we need to adapt the level to here, well, we would simply just say, hey, let's do this and adapt the level. So level adaptation is just a nod to saying, let's move our levels forward. Then we have valleys and peaks. Valleys and peaks are simply just V patterns on your chart, and they just look like this. Exactly what you would expect from mountains. If you were looking at mountains like this, you would say, hey, there's valleys and peaks there. These being the peaks of the mountain and these sides of it being the valleys. So if we were to draw that on a chart, it would simply look like this. This is a peak right here, and this is a valley. And this is going to be a peak once this candle comes up to here and pulls back down. And therefore you have valleys and peaks. And please realize as we go through this and talk about these basic terms that they are this is terminology you'll hear in the industry, but it is not necessarily relevant to do an overarching amount of studying on these things, as there's not really anything to study. They're just terminologies that we're setting forth for beginners to understand what we talk about as we go forward. So we simply draw levels, we draw trends. With those two pieces of information, those will be the core pieces of everything we do. We will only ever draw levels and trends, and everything else in this video we will communicate as it's a type of level or it's a type of trend. And there's also what we call ranges, but again, that's more theory based. So right now we are just going through the practical application, what we do. If you know how to draw a trend line and you know how to draw a level, congratulations, you're already a step ahead most. And this, as you realize, this is all you'll ever need to draw on your charts in order to make decisions. The rest is putting the theory together. So realize that valleys and peaks are just things that people refer to and talk about, so you can keep up in day trading chatter, simply put as that. Beyond valleys and peaks, we have fractal information. And fractal information comes into what we would say is we are breaking through the candles in different time frames. So fractal being that if we had a 4-hour, the fractal information would be the information found inside of that 4-hour candle. Just like when we went to our time frames and we went down to the 1 hour, well, fractally, there's information inside of that 4-hour candle. There's more fractal information inside of that 1-hour candle to go to the 15-minute candle. As we go to the 15-minute candle here, there's more fractal information to the 5. So this is just a measurement of fractures of different things. So if you had a 4-hour candle and you'd say, well, what's the fractal information? I would expect if a student said that to another student, or I said that to a student, if we were on the 4-hour candle, I would say, well, what's the fractal information? I would simply just expect them to go a time frame down and show me the important information inside of that 4-hour candle. So again, just a nod to the way in which we communicate in day trading. Now we have up and down trends. An uptrend is simply just a trend that's moving up, and you would go distribution to distribution candle on all uptrends. And downtrends are simply just trends that are moving down, and you'd go accumulation to accumulation candle. Again, we're not worried about the accuracy on these trends, as this is not the correct time frame. Just to show what these trends would look like, you would have accumulation to accumulation candles, and you'd have distribution to distribution candles. So if you were to use the correct trend on the top side, you would simply go accumulation to accumulation candle, and then you could go further into this and you could see where that had stopped price here and it had stopped price here and so forth, and it would continue to move on. And that would be your downtrend, and your uptrend would simply be the exact same thing on the other side. What you'd have is you'd have a distribution candle to another distribution candle like this, and as you can see, distribution to distribution candle, and you get a perfect result. Accumulation to accumulation candle, and you get a perfect result. On both sides of this chart, you're seeing that perfect result. So as you can see here, perfect result there, perfect result here. So again, an uptrend is just a trend that moves up, and it always is attached on the correct time frame, which we'll get into correct time frames later in this video. It is always attached from the blue candles on the bottom and the white candles on the top. And the other thing we're going to be talking about is entries and exits to wrap up the beginner section of this video. We're getting through the beginner section very quickly because, again, this beginner section is more just about talking about some of the popularly used terms that we have in day trading, as well as just setting a few standards going forth so that everybody here can keep up before we move on to a more advanced piece. And entries and exits are simply just targets in another way that we say it. We'd have levels, for example, that we would target. Like, for example, this was a level, it was a target, it was our entry. And then maybe if we were to use the same time frame on the other side, we would say, well, our 1 hour time frame right here would give us the exit to our trade, which would also be the target. So this would be an entry, and so would this, because this could be an entry for a long and this could be an entry for a short. A long in trading means that you are betting the price is going to move up. A short in trading means that you are betting the price is going to move down. For example, if you wanted to use this level here and you wanted to short, which meant that you are going to bet that the price is moving down, and you made, say, 200% on this trade because you were using leverage, then what would happen is you would take $100, you would enter right here as a short, which would be your target entry, and you would exit somewhere down here, which would also be a target, because entries and exits are both targets. You're finding targets for where you want to enter trades, and you're finding targets for where you want to exit trades. And that is really the cycle of day trading and how it exists. We have entries and exits and nothing else. And entries and exits are both targets. So if we were to lump all these three terms, targets, entries, and exits, they'd all live in the same family, as where entries can be targets and exits can also be targets. Or we could just say, hey, I'm targeting this price to short because I was in a long from this target. Right? Or you're just going to say, I think it's going to go up to this target, so I will long here, take an entry here. Well, I think it's going to keep moving down to my target much lower, so I'll take an entry once we get lower. And then if we hit my entry, then I'll exit at this point. So this is just, again, verbatim for an easy flow of use where people can have different sets of information that they go into. And that would be it for the beginner section of this course. It's quick, it's simple. The only thing we are looking to do in this section is to outline a few terms for everybody, set a few standard rules, such as accumulation to accumulation for trends on the top side of the chart, and distribution to distribution for trends on the bottom side of the chart, and to just understand that there are a couple terms that we will be referring to and that gets referred to in the trading community going forward. Congratulations, you made it through the beginner section, the easiest section of this, but at least you've got the correct foundation to move forward before we get on to the advanced stuff, where we're actually going to start looking at different types of information. Now that we're done the beginner section of this video, let's move on to the advanced section. But before we do that, let's discuss the time frames that we will need to be using in our charting. So time frames are an exact science, and what we mean by time frames is the buttons we click on our screen that shows us how much data is contained in each candle. So this 1H here represents 1 hour. That means every single candle that passes represents 1 hour of time. So you can assume that there's 60 minutes in here. So if we were to look inside of this candle at the 60 minutes at 1 minute time frames, this candle here would contain 60 1-minute time frames, and so forth. Simple math that we can all agree we don't need to discuss. Now, time frames are an exact science and are not up for debate. These are the time frames that we use as they have been proven on the chart through a mathematical formula called decycling. Now, decycling is the reduction of vertices against each other to come to a conclusion point. And in plain English, that means you have thousands of decisions that ask a simple A or B question. Is the answer yes or no? It's a simple tree of decisions, or a decision tree where one question has two answers and it almost follows a path like so. This is the question. It can either go here or it can either go here. If it goes here, it ends up to this, and that can either go here or that can go here. And it goes to this and that can go here and that can go here, which means these are now not possibilities. This is what decycling in math is. It's the reduction of vertices against each other to come to the final conclusion point where you have a correct answer by asking questions of yes or no. This has been documented in day trading and can be proven through math that these are the timeframes we use, as decycling has set the barriers and the limitations of what we use in day trading for timeframes. If you are using something else, you are breaking the mathematical formula and they will not work. Despite the coincidental nature, I have been doing this for a very long time, over a decade, and this has never failed me. And on top of that, it can be proven on the charts through math by doing back testing and calculations. So we will come to a one-stop agreement that these are the timeframes that we use, not because it is my opinion, simply because I took the time to research and decode the decycled nature, which is a mathematical formula on the charts. I took the time about 10 or 11 years ago to decode this information and have been using it ever since, and it has never proven me wrong, nor does it prove anybody wrong that uses this. So if you disagree with this formula, you are not disagreeing with my personal opinion, you are disagreeing with math, and math doesn't have right or wrongs. It is only right, and the wrong side of that is you simply don't understand. So we have 1 minute timeframes, 3 minute timeframes, 5 minute timeframes, 15 minute timeframes, the 1 hour timeframe, the 4 hour timeframe, the daily timeframe, the weekly timeframe, the monthly timeframe, and the 12-month timeframe. Now in Bitcoin, we do not use the monthly timeframe yet, or the 12-month timeframe. Again, not opinion based by me saying because we don't, because there has not been enough time in Bitcoin's history, no matter what chart you use, even if it's legacy charts like I was trading back in 2015 when all the Mt. Gox stuff was happening, and before Bitcoin was even on Mt. Gox, when it was still trading for small amounts of money. There is simply not enough time in Bitcoin's history to justify the use case of those timeframes yet. There is a certain threshold point that will cross when we can activate those timeframes. But before we got into the 12-month, we'd get into the monthly. We barely just got into being able to use weekly timeframes on our charts for things like legacy levels, for things like hold levels. And you can see here, the data still doesn't allow you to see levels that can be hit with accurate, reliable data. If you were to go here, you can see the price just goes straight over. If you were to go here, you can see price still doesn't respect here. And this is coincidental, this mark here. If you were to go back here and mark levels, you can see that, well, this may look nice and coincidental. I can guarantee you if I broke this chart down, which I've done many times, by the way, this level is indeed not an accurate level, despite what these may look like. We have just been able to barely use the weekly levels, and they are still not really usable. Daily is kind of our biggest time frame on Bitcoin, and let's leave it at that for the sake of this video, to save arguments about what timeframes can be used, because again, you're not arguing with me, you're simply arguing with math. So take it up with science, not science and math. Don't take it up with my own personal opinion, because it's not of my opinion, just things I've decoded and back tested and cracked, along with other very famous day traders. So these are the timeframes we use. And if you want to activate those timeframes on your charts, you can simply go and click these stars to add them to favorites. You can see here, I just added the 2 hour timeframe. That's a big no-no. Take that off, use only these, and that is it. Okay, let's move on. The next thing we need to look at here is trend architecture and the effect of time. So trend architecture is going to be something that we are starting to create the architecture of what our chart looks like. And when we use that term architecture, we are talking about marking levels and creating boundaries on our charts. So let's just start by creating some architecture from here to there. Let's just start. And we're not worrying about right now about if this is accurate or not. We are just finding some simple basic architecture that we can agree on that, hey, this looks good. Let's start discussing what architecture looks like on the charts. And the architecture of the charts is the levels that we decide to mark in our charts. And with that, we're going to pause again and talk about colors. So in day trading, we also have a color schematic that we use. And I'm going to go and label all of these for ease of use. We use red for the daily. And the reason we use different colors for our information, and you know what we're going to do? We're going to color the same color text as we are levels. The reason we do this is because when we are going through time frames and we see a bunch of different colors, we need to just have clarity visually of what makes sense on our chart, so that if we see 5 or 10 different colors, we don't have much thinking to do, because we've programmed our minds to have color recognition to understand, hey, this is a red level. That means it's from the daily time frame. And it allows us to quickly and easily make those decisions fast. So we've got daily, which is red. The next one we're going to have, and what we'll do is we will mark levels that have actually been hit on the charts, so that it feels a little nicer with a little bit higher level of accuracy here. I think that would be a cool kind of like little first study to do here. This is going to be a 4-hour time frame, so this is going to be yellow. So anytime you're marking 4-hour levels, you're going to mark them in yellow. So let's mark this here, and let's put 4-hour, right? So we're going to go 4H, and that should simply be yellow. We are then going to mark another level here. We'll find a level that looks like it makes sense. We're not focusing too much on this like crazy, insane amount of accuracy right now. Rather, we're just doing time frames and colors. Let's do blue as the 1 hour, right? Very simple. We got blue, 1 hour, and we're going to change this to blue as well. And our text, for some reason, we got 1H. We want to left align this with the blue color. We've got blue. I would recommend using this coloring schematic. Actually, you know what? On the right side actually makes sense, because we can't see it if it's on the left side. So let's actually keep that on the right side, so we can see the right side here is where you see those numbers and lines. The next one down here, actually, I don't think we changed time frames. I think we accidentally left it on the 4th. That's okay. We can just simply go and mark a more accurate level. Here's the 1 hour. You can see it hits here. It hits here. It's pretty perfect. Let's go to a 15-minute level next. Let's go. Looks like this was a good one here. Green. I don't want to find something a little more localized, so we can kind of do this in a trail that's visually appealing. So this would be a 15-minute level right here. And so would this one be. So that's a nice one right there. Let's use this 15-minute level here. And let's go 15M, 15 minute, and let's move that to green as well. And then we are going to have a 5-minute level here. So maybe we should start using some information on the top side just to keep our charts nice and clean and consistent. Yeah, you know what? This looks good. Why don't we just use this one right here? Whatever's in the middle of our screen. Nice 5-minute level here, right? And you got a 5-minute level there. And this is going to be orange, and you're going to have 5-minute there. You are next going to have a 3-minute level. Oh, we want to change this to orange as well. I thought we did. We didn't. We're going to have a 5-minute level there. Now we're going to use a 3-minute level. So this one is going to be pink right here. This is a 3-minute level. We're going to go pink like this. And we're going to go 3M, because we are setting the standards of how we are charting going forward so that we don't make visual mistakes. And then we have the 1-minute level, which is your final level here. And let's find a 1-minute level that got hit somewhere. Here's a 1-minute level there. Didn't get hit. The 1-minute levels aren't always going to get hit, but we can use this one for now. That's fine. This one here is a 1-minute level, and you can see it got hit. And 1-minute levels we use as a white color code. And then we're going to go out and zoom out on the charts here and take a look at the bigger scale of things. So we have all different time frames and everything here all at once. Let's take this and let's move that text also to the right side of the screen. Because it's only going to the reach point there. So you can see we have to zoom out a little more here, and that's fine. So this is your color schematic. Red is daily, yellow is 4-hour, blue is 1 hour, 15-minute is a green, 5-minute is orange, pink is 3 minutes, and you might want to change this this tone of pink to something a little more standoutish, because it's almost too close to that red. So you got pink and white. That way, if I was moving through time frames here and I was going like this and like this, I could easily see, hey, 15-minute level, hey, 1 minute level. Oh, that's the daily level. And this will be important as we move forward in these trainings, because we are going to constantly revert back to different time frames to understand the more advanced parts of day trading. So now that we've got our time frames down, our color schematic down, we can actually move on and start getting into the nitty-gritty parts of the advanced pieces to this thing. Now that we've got our levels and trends done, the colors down that we use, and a good understanding of how to do things going forward with timeframes, I want to just discuss where this will work and where this won't work. Where it will work is in every single market, whether it be crypto, commodities, Forex, stocks. It doesn't matter. It's all the same. There's no alterations that you make to the trading data. There is no instances where you may adjust things for certain parameters. These are hard set rules that are actually dictated across all markets and do not change. So if you're trading Bitcoin in a certain way and it's working, trade Forex or stocks the exact same way. It doesn't matter if it's commodities, doesn't matter. It doesn't you could say whatever you want to me, but cotton, what about this? I'm just going to tell you, it doesn't matter. It's all the same. So let's have that standard going forth, whether it's crypto markets or whether it's commodities, Forex, stocks. I trade them all and it's literally all the same. It doesn't matter. So let's get that off the table right now. We have our timeframes down. Let's take these off the screen and start talking about our first advanced concept, which is the effect of time. Now we are going to dive into the effect of time over the course of this video, and even going into the master level content later on in the video, where we use one time frame to understand what's going to happen next, pitted against the effect of another time frame. The effect of time is an important thing to discuss. It is the usage and it is the ability to understand that time frames have an effect on each other, and that we always work time frame down. So if you are going to start charting, the first thing you need to do is always work down and never work up. Now, there is one inclusion later on that we will discuss where we do actually work up in timeframes, but that doesn't have anything to do with the charting and the way we actually find levels and chart. This is actually more of a comparative analysis statement that only has to do once you've already entered a trade, and then you use timeframes to build up in a specific way. Outside of that one very silo experience, that instance that exists in a silo or from a helicopter view. Other than that, we will only ever be using timeframes down. So I need everybody watching this video to get into the habit of marking your highest timeframes first and working down. If you go to the 4 hour, you mark a level, and then I see you going to the daily, or if you go to the daily, if you go here, you mark a 4 hour level. And also we're going to be doing all the correct colors from this moment out to start building habits. If you do this and then move up a time frame, imagine me virtually slapping your wrist. This is a no-no. We don't do this. We don't work time frame up. We always work time frame down for high level efficiency. Otherwise, you're going to find yourself running into loops, making errors, and often having to go redo your work. And this is a terrible habit to form right from zero, as it creates a false sense of correctness on the charts, which builds a bad habit to break in your minds. And we want to avoid that at all costs. So this whole entire conceptual of this video has been built to reduce the amounts of errors that you will have by following this as I've outlined it on my notepads beside me. This is engineered to follow these steps and rules, not as a strategy to work, but as a complete way to day trade, not a quick strategy for one type of trading, but an all-encompassing umbrella to everything that you will ever day trade. Work time frame down. I have to repeat myself. I'm kicking you out of the class. So we mark levels, time frame down. So we would mark this as a daily. If we were now moving down to the next time frame, we would go and then we would mark that next time frame to find our next target. And we would always work down. So the effect of time dictates that no matter what you're doing on your charts, you are always working down in time frames. You can see here's a 4 hour here. It gets hit here. You're going to work down to find your next target. So go down a time frame. Then if you were to move down a time frame, you would go here and you'd say, hey, I'm on my next time frame. Can I find my next trade? Yeah, you can, as long as you follow the rules of going down in time. And you can see that you've got a great little trade right here because you worked down. If I see you mark an hourly, then up to a 4, just light your money on fire. You might not actually be wrong, but it's going to develop bad habits. And that's the effect of time, is that we constantly are working down in time frames like that. Now, with down in time frames, we always want to make sure that we are closing in as well. And that's what I've done in this example. We are closing in, with the exception of combination levels, which we will get to a little later in the video. We'll get to combination videos. But with the effect of time, we also want to say that on top of the effect of time, we work in a compressed manner. So I say we work down, but this could technically be up as well, because from this 4 hour, you've worked upwards visually in the chart. But this is down in time frame. And if the price is moving up, technically it's down in terms of how much the price can move. So I just want you to think of this as compressing your data. If you've done this on the highest time frames, do your next time frames underneath that. If we were to go in chart levels next, so next we would go find the hourly on this top side and the 15-minute on this bottom side. I want you finding it underneath this level for the hourly and above this level for the 15-minute. So we are always in this constant compression. And one of the reasons that exists is because when you compress a point from, say, here, the next compression point is here, the next compression point is here. You know what that gives you? It gives you trends. It gives you scientifically proven and mathematically driven data to never make mistakes. Okay, so this is key. This is important. And just to further this example here, what I'm going to do is I'm going to go find the 1 hour here. So if I was moving down in time and we were to say, okay, we moved down, this was the 4 hour target that got hit. We are on the 1 hour now. Let's mark the 1 hour level. Oh, look at that. Perfect trade. How close did we get? Is it even measurable? Let's see the percentage of how close we can get here. You are 0.04% away. There, you can't get close enough. This is not even a 10th of a percent in terms of accuracy. You are talking about a 1/4 of a 10th of a percent. So I think that's a 40th of a percent if my brain is working right. And on this side, if you were to go to the 15-minute time frame and just find the 15-minute time frame that made sense, well, that would be this one right here or here. Actually, you'd be back to here. This was never hit, so you'd be back right here on this time frame here. And look at that. You've got your perfect entry and exit because you went from this time frame to the relevant time frame that was on this side. And you'll understand how to do this as time goes on. But for example, if you were to take this as a 100x trade with $1,000, this would have just made you $3,850 in a morning. So you would have made $3,850 on this one trade in the course of what this happened at 9 a.m. and it was done by, well, let's call it 2 p.m. And it was done by 2 p.m. In the course of 5 hours, you made yourself almost $4,000 US. If you had used more money, if you had used $2,000, you would have made yourself almost $8,000, and et cetera, et cetera. Those profits aren't important. I don't care. This is not meant to sell you some bright, starry-eyed moment where you're like, oh my God, all the money. No, this is to train you for accuracy so you can scale up on your own to become a professional day trader as you see fit. So this is important that we use the effective time to scale into targets like this. Now, the next thing we're going to talk about is hard closing. People like to use the term, we've closed the level, we've closed the candle. There is only one way that a hard close can exist. And we're just going to go to a random example here. This looks good. It's a 15-minute level. Let's just use this one. It's already on our screen. Heck, why not? Let's just turn this into a 15-minute level. Or like so. Let's see if there's a level that's even deeper inside of this. We got a 5-minute level there. That's good. We've got a 5-minute level right here. So let's actually move it down further. And let's just mark this as a 5-minute level. And that's good. We can leave it there. And what we will do is we will just use this example for no other reason that it is a first that we've seen on our screen, and we will turn it into the correct color first, as it's a habit that we're building throughout this video. And a hard close means that the bottom side of a candle has closed underneath the level. And what we mean by bottom side, because bottom side would sound like this. Okay, bottom side of the candle is here because the candle exists on this side. Well, bottom side of the candle changes based on moving up or down. So the first thing we're going to do is we're going to draw a candlestick like so. It's not a very pretty candlestick, but that's fine. It doesn't need to be for this example. This is the body of the candle. This is the wick of the candle. Okay, so again, this would be the wick right here that you see on this blue candle here, and the body would be this little square piece right here. So the hard close is when the body of the candle closes underneath the level. So if you were moving up, the body of the candle would be this side of the candle. If you were moving down, the body would be this side. As we are trying to break this level, we are moving down against the level, which means the top side of this candle, we would call this the bottom side of the candle, has broken the level and it has hard closed. So now what we can say is, look, this right here is the bottom side of the candle, not the actual bottom because it's moving down. The bottom on the other side is the other side of the candle. So if you can see, this is the top side of a candle here, which is the bottom side. This is the same thing. This is the bottom side of a candle moving up. So I want you to understand that the bottom side of the candle is adjacent to the direction it's moving. If you're moving down, this technically would have been the bottom side of the candle. So you're moving down into this, that's the bottom side. If you're moving up into it, this is the bottom side. It's why it hits so perfectly and moves down to its level down here, right? And this is all stuff we can learn about in the future. Again, not important for now. We'll learn about it later in the video, but understand, and please understand, the bottom side of a candle is the adjacent direction to the movement of the candle. So if you were to go and say, hey, look, this broke that 5-minute level, it's no good anymore. Okay, but was there a 15-minute level that it broke? Let's go check. The 15 minutes right here. Did it hard close it? No, there's no bottom side of that candle. Let's change this to green. Okay, change this to green right here, right? Change this one as well to green. And let's mark where it would have had to break the bottom side of the candle. Would have been right here. This is not broken, hence it hits and moves down. Next target is here. Hence, it hits and doesn't break the candle. You're still moving up. Technically, if we zoom in, this one broke the bottom side. Therefore, it hard closed the level. And why? It sinks so far down in the trade, because when you hard close something, you break the level. This is the way we break levels. This is the way we break trends. Okay, let's do one more quick example on hard closing. We're going to take our daily trend and we're simply going to mark it in red. Accumulation to accumulation. Now let's use this and, oh, we already are in red. This is perfect. I don't need to change the color. Okay, so you got accumulation to accumulation candle. Fantastic. This is great news. Well, how come we didn't move up? Well, because we didn't hard close the candle. Like, let's find another trend. Let's just go for like a 15-minute trend, some random occurrence. I don't know. Let's just find a 15-minute, what we call range trend. Yeah, this looks good. Ooh, we're having trouble. We might need to zoom in a little bit here. And we should always work time frame down. So let's use the hourly time frame here. That's fine. So you see how the hourly here, it hits here, it hasn't hard closed. It has hard closed here. We need to adapt this level to that trend like so. And you can see your accuracy continues here. This is a part of level adaptation and hard closing. When you have a trend, and let's color this the right color. When you have a trend, if it hard closes, you need to adapt that to that candle. And this is what we call cycles. And you can go learn about cycles in my other material. It's not going to be important for this video. We are constantly adapting these parts of the move to see, look at here, how it hit this trend in the future. And then when it hard closed it on this candle right here, because this was the bottom side of that trend, you notice how it dumps down to its next important level, which then you would adapt this level from here out to here. So cycles is something that is in my other material, and the much longer multi-hour long videos. You want to go spend 100 hours learning it on my YouTube channel. You'll learn one of the courses in 100 hours and there's like 12 courses or something like that. So you're going to spend months, if not a year, learning all my courses. And that's fine. You can do that to know more about what we call cycles and how a cycle affects a move. But you can see here simply, you have a trend that hard closed from here. It hard closed to give you this trend here, which was amazingly accurate, came to this, tried to hold the trend, broke that trend, and now will be adapted again. So this is all part of level adaptation and hard closing. Now let's move on to what we call break levels. So we have what's called break levels and we have what's called hold levels. Hold levels are meant to hold the price up. And we're going to start deleting some of these just to get some more clarity on the charts. We have what's called hold levels and we have what's called break levels. Hold levels, as implied by the name, are meant to hold the price in that direction. Break levels are meant to break the price and continue moving in the direction that they're attacking the break level. So for example, if you had a hold level and a break level, this would say, I'm trying to hold this to continue moving up. This would say, I've attacked this level to try to break the trade down. So it's the difference between a hold and a break. Whatever direction you're moving in, if you continue to hit hold level, so if you're moving up and up and up and up, and this is a hold level right here, this hitting it will hold the price up. This side of it would be a break level. So you have the hold level, which protects the break level. And in theory, this should just make natural sense because in order to hit a break level, there must be something that holds price up prior to it hitting a break level. So then you would have a very simple and easy chart. And you would say, hey, here's a hold level that got held. Here's the break level. So if you came all the way down here and hit that break level, you would say, okay, well, this is trying to break the move. And if it can't regain its accumulation, it's going to break and have like a pretty substantial move down. So you have hold and break levels. And let's go define what those look like. You remember when we talked about peaks and valleys in the previous section? Break levels are peaks and valleys that are a minimum of 2 candles, but never anything more. I shouldn't say never anything more. It can be 10 candles in a row. You just don't have to have a parameter where you say, hey, it's 2 candles, but is it also 3, 4, and 5? As long as it's 2 candles of the same color, it is a break level. Now, it has to be 2 candles of the same color that's moving in a certain direction. So if you want a break level on the top side of your charts, it has to be 2 blue candles or distribution candles. So you can only mark distribution candles as break levels. So let's mark this as a break level. Break level. You can only use, let's go do our color schematic here since we're on the hourly. You can only use break levels on the top side of your chart, meaning that if you were to go and hit this level, you'd likely be trying to break up like this. You can only use it on distribution candles. Minimum is 2. So let's just do a quick exercise here. This would have been a break level. This 2 candle valley here would have been a break level. This one would have been a break level. This 2 candle would have been a break level. This 1 candle would not. This 3 candles would have been a break level. Now, not all break levels are usable, and we will get into that later in the video. This is just to define what a break level is. And then a hold level is something that will hold the price down. So if we were to say, and quickly go over and change this and say, hey, what about something that's more localized on the charts? This is a break level, okay? It's 2 candles. So if you were to go up and touch this, it's going to break and move above that valley. Well, where's the hold level? Well, the hold level's right here. So if this were to hold the price, you're going to not break the move up. Instead, you're going to continue to move down. So let's go here and we're going to put hold level like so. Right? So you've got a hold level and a break level. And if you were to take this chart and hit the replayer tool and say, hey, we're going to move up if we hit the break level, but we're going to move down if we hit the hold level. This is a very simple, if you hit this level, you're going to continue down. If you hit this level, you're going to try to break up. If we hit play on the replayer tool, we'll see, hey, look at that. It hit the held level. Well, it hit the hold level. It hit the held level. It held the hold level and hit the hold, and the level held from the hold. There you go. Try to explain that to somebody. I just did it pretty decently. That was eloquent, if I must say so myself. It hit the hold level. So therefore, in theory, if we were to take this back and select this moment here, you just entered a trade right here as a short. If this hold level gets hit and it continues to hold the move, you're going to move down. And let's see how that played out. Look at that. It continued to move down. Most likely to the hold or the break level. Well, let's see. Well, here was the break level. And on the opposite side of the chart, and let's just delete that and copy paste the other one on top because we're lazy and we don't want to go retype things. You would have the same thing. You would have a hold and a break level. You would have a break level here and you would have a hold level here. So you would say, all right, which side is this thing stopping on? Look, it hit the hold level on the top side, meaning it's moving down. It hit the break level on the bottom side, which also it means it's going to continue moving down. So you can expect this at a very early glance. Just with our advanced knowledge, we are already getting some pretty decent accuracy, 0.04%, and we haven't even gotten to the pro level stuff, which doesn't even tackle master's level. I don't even know how we could get more accurate at this point, but trust me, we can. We can get so accurate. We nail things to the cent on a regular basis. How crazy is that? Yep. And this is just the beginning of it, right? So you've hit a break level. You should, in theory, start moving down. The hold level didn't hold, although it hit the hold level and then it went and laddered the break. Again, not really important for right now. A little bit too advanced for where we're at in the video, but this just goes to show you that you have a hold level and a break level on both sides of the charts, which just leads you into what we call a Pandora's box. And a Pandora's box is when you start building out expectations of ranges and things live inside of Pandora's boxes. Now, Pandora's box is a very complex and lengthy topic, so we're making it very simple for this. Again, if you want to know any one of these topics that I'm mentioning in this video, I have multiple videos that are hours and hours and hours long to help you overcome your weaknesses in these certain sections. This is simply to just go through every single topic to give you a very quick, I want to learn how to be a pro in one day. This is the video. This is a Pandora's box, and what will happen is it will constantly go between targets to targets, diminishing itself against each other until one of these sides gets broken. You notice how this would have been a hold level, 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 but turned into a break level here, right? Oh, interesting. All of a sudden, this is still laddering down and you're starting to lose parts of this move, right? And this is laddering down again because it's still hitting hold levels on the top, protecting these peaks, right? But also attacking the bottom of these valleys. So the peaks and valleys are your break levels. The hold levels are the things that protect those peaks and valleys. So you're going to hit another hold level here, and then you're going to start moving down again, possibly even hitting these 2 white candles here, which would be a break level as well. And then possibly hitting another hold level. Maybe there's a little bump in this thing here, causes a hold level, therefore further degrading the price or the degradation of the charts or the price, further moving down. So you have hold levels, break levels, and a Pandora's box. And this box, what we call Pandora's box, is meant to have things like ranges and trends inside of it that constantly diminish against each other as you're hitting these peaks and valleys. And as you're hitting them and it's going forward and going into this next one here, and the Pandora's box is getting smaller and smaller. And then, you know, as you keep going, the Pandora's box gets smaller and smaller and smaller and smaller until what happens is that Pandora's box ends up breaking a trend. So if we were to just simply mark this as a trend here, and all we're doing is we're attaching the base point and the reach point, which is your 2 points that you use to control the trend. We are simply attaching the base point and the reach point to trends. Maybe we should just follow the same schematic on the bottom instead of trying to be technically correct. You just have trends, and eventually what's going to happen is your Pandora's box is going to hit a point where it gets to one of these trends. It's going to hit a break level like this. It has already broken that trend. You are now going to sink down, and that Pandora's box is broken. So that is what it looks like when you have a Pandora's box, hold levels, break levels, trends all starting to work together to show you what accuracy in day trading can look like. Let's just get rid of this on our screen, all that stuff. Let's go mark this hold level back to where it was. And let's go and talk about origin levels. Now, origin levels, they are a form of polarity and what is known as polarity on the charts, and our first form of polarity. Now, there's a few different ways that we can see polarity on the charts, but polarity are polarized moments that you live on one or the other side of. So for example, break levels turn into what we call origin levels. And we call them origins simply for the fact that they were the original level that was hit. It's the original level. And I coined this just as origin levels, right? So this is a break level. Break levels turn into origin levels. Hold levels do not. Only a break can turn into an origin. And it turns into an origin once it has been hit, not once, but a second time. So you have a break level that gets hit 2 times. It is therefore an origin level. And a good spot of where we can see this is something local. Let's find a break level. Okay, right here. Break level. Let's mark this. You've got a break level here. Let's see if we can find it on the hourly as well. Yeah, you've got one right here. Here's a break level that turned into an origin. Or if we look back and move back, here's a break level on this side of the chart. Hit it once, hit it a second time. This is an origin level. Or you can find another one on the chart. Let's just go take a look where we can see where a level gets hit over and over and over. Right here. This would be another one right here. So this is another, oh no, sorry, it can't be here. I thought it was right here. Quick, my eyes deceived me. It's actually right here. That one doesn't exist. This one's only been hit once. It's been hit twice now, but it's broken. Here's a good spot. So here would be another, this is a spot where you have a break level that got hit once. It got hit twice. And the distinction of it being hit twice, it cannot go like this back-to-back candles. So say that this was the first time it got touched right here. It cannot be back-to-back. There has to be at least one candle of separation on the same time frame that it was created. So the fact that we created this on the hourly, we'll move up in time frames, which is a cardinal sin. I said don't do it, but for teaching examples, this works. See how there's no the break level would be here, and we simply don't have that yet. Like that, there's your break level, you don't have it. This is the next time frame down. So you would have been on this chart saying, hey, there's no origin level there. It's you know, you have one right here because this isn't a hard close, but let's not talk about that. Let's just talk about this one here. Go back to our hourly time frame. Notice that we have this candle hit here. There's at least one candle of separation. It's hit a second time. This is now known as polarity on the charts. So this is known as an origin level or an original level. Once you start getting below this level long term, you are going to have a breakout moment. And if you were to zoom in on this chart, you can see that you actually hard close this level. So it is no longer there. Once you hard close a level, this is an origin level right now. And what we do with origin levels is we mark them like this with a dashed line. Sorry, not a dashed line. Yes, a dashed line, not a dotted line. Dotted lines are for something else. A dashed line is what we mark origins with. So let's go to try to find a relevant origin. Again, we're not focusing on accuracy. We're teaching the theory, and then we will focus on accuracy. Let's go to try to find an origin level and just see where that breakout can exist. So we actually have, looks like one right here. Here's an origin level. So it's a level that was hit one. It was a break level, 2 candles of distribution, and they have to be accumulation moving up, distribution moving down. Just as we talked about earlier, same thing with your trends. They have a certain candle type they use. You have distribution on the top side, accumulation on the bottom side. So this would be one. Another one would be right here. And these are origin levels. You can see that it will constantly struggle to get over top of this level. But once it does, it creates what we call a polarized moment. And you are going to exist on one or the other side of this polarized moment. As long as you're underneath this level of polarity, and this is something to remember for polarity in general in the future, you will always exist under it. Once you break over top of it, you will constantly exist over top of it until you get to that moment where you've lost it and broken back under it. So this is polarity, and it's called polarity because it polarizes the charts into 2 different sides of the chart. So break levels turn into origin levels once they're hit twice. And let's go find a few more examples of this, something that also would be pretty cool to look at. Let's just try to find some. Here's 2 candles right here. So let's see how this reacts here. This is an origin level. We're not sure if it's the right time frame, but it's not going to hurt to check. This one hard closed and broken. It's not the right time frame. We're not looking for perfect accuracy. We're kind of looking for perfect results here. So here it is right here. This was hit once, never really hit a second time, just breaks over top and lives over top of it. Go up to here. This is another one right here. You can see that this was a break level that got hit, but not 2 times. So there's no form of polarity there. Well, let's keep going. Let's find a polarized moment here on the charts. Well, you've got one right here. This was never hard closed. You can see this is a white candle. It's never hard closed. And you can see it's struggling to stay over top of that. It's hard closed there, but there's probably an even larger time frame. And this is a good example as why we don't work that direction of the charts, because you'll get into a perpetual spot of, hey, I need to move up, I need to move up, I need to move up, I need to continuously move up in time frames, and you'll just have this inaccuracy is what you're seeing now, right? So then you can just go and you can find polarity or these origin levels kind of almost anywhere on the charts. Like here's a daily one right here. And this broke down here and has a reaction as it breaks down and loses quite a bit of price here. Loses 700% if you're on 100x trading. So you hard close out, it loses 700%. So this is something we're going to have to keep in mind going forward, what origin levels are and how they affect the charts, because they have a pretty profound effect on the charts. If we were to just mark one right here, you can say, here's a break level, right? Look at this. It creates that polarity between the top and bottom side of the chart. You have a 15-minute level there. It hits once, it hits twice. Now it's going to have trouble getting over top of that. And when it does, you can see that it is still staying above it. So all the charts before this moment live under it, and after that moment live above it. And there's your origin levels. All right, now that we've discussed origins, break levels, hold levels, Pandora's box, we need to talk about strong and greedy levels and front and backside levels. Now, I don't want you getting hung up on the origin levels yet, as they are just there to form as points of polarity as we move forward. They're not there to meant for you to be like, hey, here's an origin level. Let's mark it. Let's take it. Awesome. That's something very cool to do, and we can take trades off origin levels. Note, they will tie to different theories and topics as we continue in this video. Right now, we are still identifying, and we're in the advanced section of starting to identify how we mark proper things on the charts. And now we're going to get into strong and greedy levels. Strong levels are going to have strong reactions. So a strong level would look like this. The level hits and it's a strong level, and you would expect a strong reaction. A greedy level, if this was a greedy level instead, it would hit and you would expect it to try to have like almost like a greedy reaction, like, oh, we're not sure if it's going to get there. It's so greedy of a trade that yeah, and then it rockets, right? So if it holds for long enough, this greedy level, it's called a greedy level for a reason. It's kind of like uncertain if it's going to hold. But and there's a whole scientific reason behind that. If you want to learn about that, then you go and you watch my videos on front side hold levels, back side hold levels, strong and greedy hold levels. I have a whole section of information about that. But for now, we're just identifying these so we can mark them. Now, strong levels are going to be your backside levels. A backside, you know those valleys we talked about, those valleys and peaks that look like this, right? This being the peak, this being the valley. You have the break and the hold level. Well, the break level and the hold level would be like this. You'd have a break level here, right? And let's change this to 4 hour. And this would be a 4-hour break level if we're using proper terminology. This, upon the second touch, if it were to go up here, would be a 4-hour origin. Or if you were to go back to here, this is already a point of polarity in the charts as a 4-hour origin level. So just as a nod to, hey, is this an origin level? It actually is. But we're not talking about that part, but just to make that clear, your strong and greedy levels are going to be protected. So realize your peaks and valleys that look like this are nothing but break levels here and here and here and here. They're just break levels going against break levels going against break levels. Like this is a break level going against this is a break level. So if price was currently like this, realize that this had created a localized break level because it's 2 white candles. And actually there's another localized break level in this, which is actually right here. So this is a localized break level. See how it hit the break level? And if it goes back down there again, it's going to break the move. As we were saying, with break levels that turn into origin levels, right? So this is all this is break levels and hold levels working against each other, right? So now, a second we have 2 blue candles, we have a break level here, we have a break level here that's already been broken, and this is an origin level, right? So this right here would be the front side hold level. The back side hold level would be the starting of that move. So like if you were to say this is the back side, you would be saying this is the connected valley to the greediest front side level. So there's a front side level and a back side level. If we were to go down in time frames and start marking this out, you would say, okay, instead of that, this would be the front side level here on the hourly, and this would be the back side level on the hourly. So you've got the front side, right? And you've got the backside. And the interesting thing about this is the backside is always just the break level. So when you break that part of the move, it actually becomes polarity because it was an origin level. So now it's all starting to come together, right? Like this was an origin level here. It hit once, it didn't actually hit twice, but this one hit twice before closing. So it hits once here, it hits twice there, therefore makes it an origin level, right? So you can see how it's kind of neat because origin levels are kind of technically backsides before they happen. So you can almost start to see in the future between front sides and back sides. And if you go even further in time frames, let's take a look at the 15-minute time frame here, which is this one here would be the backside, and then this one would be the front side. Oh, look at that. We made a mistake. Actually, this would be the front side on the 15, right? And this would be the back side here. So the back sides are always the stronger levels because they typically offer a larger move in one direction, but they don't offer a better price. If you hold out for the better price in the trade, you are going for the greedy level, but you are breaking beyond the strongest part of that level. So the kind of the trade-off is this is the strongest part, which has the most likeliness to dump the move, giving you kind of like almost a safer trade, as to where this is saying like, oh, we're going to be greedy. It's still a 15-minute level because please realize that both of these are 15-minute levels regardless. They're both 15-minute levels. The front side though is kind of greedier. So you're sacrificing the strength of the trade to have that almost like instant relief. Oh my God, easy trade. It's just going down. You're trading that off for, hey, we're getting really greedy in this trade, but if it holds, man, that's going to be awesome. So it's like almost you're trading off better entry for safer entry in a way. So it's kind of a balance between understanding what to do in what moments, right? And then so if you were to go here and you go and you find this level or whatever it was there, that 4-hour level, and it's like a backside level here, right? Like so, and you find this and you've got a backside level here, you got the backside 4-hour level here. This is kind of telling you, hey, if we hit this, it's likely going to bounce down, and this is like more of a realistic expectation of a target than this. So like if we hit play here, now that we're underneath this, you would say, okay, like I just want the safe trade, I should just enter right here. So what we would do is we would look to enter a short when it hits here, this 4-hour level. And if we wanted to be really greedy, we would say, hey, I want to get a better price and save myself the difference of 1.5% on the trade. Likely this isn't going to get hit, but if it doesn't hold, hey, you've got a sicko entry, right? And so that's the trade-off. This being the stronger level has a more likeliness to hit. And so let's see what happens. Look at that, hits that 4-hour level and completely moves down and just completely rocks this chart into oblivion. As we said before, the strong level, whether you use this or justified it as this, and as we go on to this video, you'll know which one to use because we'll discuss like, hey, do we use this one or that one? You can see that backside level was actually a much stronger level and had a much greater impact. Hey, if you got to this front side, great. That's really fantastic. A good example of a backside front side that got hit was here's the backside on the hourly, right? So you go here and you say, yeah, here's the hourly backside. Here's the hourly front side. Well, let's see which one got hit. Well, actually, the front side got hit in this case, but that's for a different reason completely, using the difference between a backside and a front side on a trade. And that also rocked this thing down because it had to sit there and hold for a little bit. So that's the difference between greedy levels, front side, backside, and everything that we've used thus far. So what you are doing and what we are trying to accomplish right now is something called data points. Data points are everything on the chart that we use that can communicate a set of data to us. So everything we mark is a data point. So when we are referring to these things, I was looking for the 1 hour data point here. This is a 1 hour data point that's allowing me to understand the decision and communicating what to do next in the trade. And with these data points, what we're trying to do is we're constantly on the understanding of what we call logic flow. And that's the flow of logic of the chart. So logic flow is what we must master by the end of this video. And we master logic flow by understanding the data points on the charts. The data points are all encompassing to everything that we see on the charts that allow us to make decisions. So please understand that we are constantly looking for data points on the chart. And I think the last thing we're going to go through here is ranges on our chart. And then we're going to break off and go into the pro section of this video. Because at first in the beginners section, what we did is we got our terms. Now we're starting to get accurate data points on our charts. We will look at ranges, and then we will start to break into some examples and put that kind of as an anchor point for the video, because I want to give a set of examples as to what it looks like when you're doing this, just using the information we've looked at so far, and you're kind of at this advanced cycle. And then we're going to do it again for the professional cycle or the pro level, and then again at the master level. All right, we're almost halfway through this video, and we have one more thing before we get into some examples of working with all the knowledge we've learned thus far, and that is ranges. And ranges can be best described as areas on our chart that represent a range of moves. Now we're going to use kind of this drawing square tool to start drawing out some ranges and discussing them. And ranges usually go from the low of one part of a move to the high of another part of a move. So if I was to say this was a range, this would be correct, except that what I would do is I'd expand it back here because this is kind of close enough. And I would say this is a range, and this would be the local range. The next range I would say would be kind of from here to here. It would be a much bigger range. So as we zoom out, we can see there's a range inside of a range, and that would be another range. So this would be the local range, which is extremely local to the move. This would be the global range, which would be global to the move. And then you would have a legacy range, which would be even bigger than that. And ranges can exist within ranges. And really the most important thing about ranges, without getting too far into the range game, and I have tons of material on ranges, is that we can see ranges everywhere on the chart, and there's ranges inside of ranges inside of ranges. And as we keep going, and expanding this thing out, another range could exist from, let's say, here all the way up to here. And then there could be another range that's even smaller from here to here. And we can see that the overlapping of these boxes continuously darkens the color of the smaller ranges. And we're just going to keep building out these ranges. And this one could even be expanded backwards to back here, and even all the way up to here to say, hey, there was a much larger range over here. But instead of expanding this one, let's just make a new range like this to this, right? And you can see that ranges exist inside of ranges, inside of more ranges, inside of more ranges. And as we continue to move through our charts, you've got ranges everywhere. Now, one of the most important parts about understanding ranges is that if you're going to break one range, you're going to go into the next range. And it takes a little bit of finessing to understand fully how kind of perfect range work exists, right? So if you're talking about where to put all these ranges and what are the perfect ones, I have tons of content about that on my YouTube. Go check it out. There is lesson after lesson after lesson I have about ranges, about all of this material. Again, this video is just short, quick examples of everything and working it all together. So we could take somebody who's never day traded a day in their life and turn them into pros. And whoopsies, we went to different chart. That was a bank nifty chart. We don't need to be looking at that. We're just doing this on Bitcoin today, but I do trade bank nifty and Forex and all that other stuff too. So one of the most important things, like I said, is to understand that ranges exist inside of ranges, exist inside of ranges. So what we're going to do is we're just going to draw a few different examples here just to follow along with this idea of understanding where ranges are. So like if you were to break this range here, what you do is you'd go down into this range. If you were to break this range, you'd go down into this range. If you were to break this range, you'd go down into this range. And I'm just drawing the very bottom of the range. Please realize that that bottom of the range represents the breaking of the range. So you could take a buy somewhere above that and you would find the levels that exist from the bottom of this range to kind of the hold level here. So somewhere in there is, some pretty amazing levels. But just to understand that as we break one range, we're exposing ourselves to the next range below. So as we keep breaking these ranges, we are just going to keep dropping and dropping and dropping to larger and larger and larger pieces of the chart, or alternatively breaking up into higher and higher and higher and even higher pieces of the chart. So ranges are super important. And one of the most important things I would communicate about ranges is the local range is always the most important, because we only really care about what's happening in the chart right now. So if I were to use a local range, and this is now going to go into an example of all things that we've learned so far. And so we're at the halfway point of learned knowledge. This will now be a break to go into our first example using the knowledge we've learned so far. So it's not going to be an overly complex example that I go through, but I think it'll be a good one nonetheless to just say, hey, you've made it to the halfway point of this video. This is where your skill set should lie and what you should be doing with your charting so far, so that we're kind of all on the same page, which is a great way to do this. And let's start with the most recent piece that we just did, which is the range. So the range exists from here to here as the levels have been kind of hitting each other and compressing against each other. So this is the range. So if we are going to stay inside of this range, we need to first realize that we are going to have a short opportunity somewhere at the top of this chart, right? Obviously, we have a ladder point here and a ladder point here, or the base of the move here, and then a ladder point here. And remember what we said about not only trend work, but also about ladders, is that a ladder will create your trend work. So we're going to mark our trend here and we're going to color this to the correct level. So we've got a 4-hour level there. We also are going to have a 4-hour level here. So we've got a 4-hour trend on top and a 4-hour trend on bottom. And when I say level, please realize that horizontal rays and trends, levels are levels. They make no difference. They're all data on the screen, whether it's a trend or a level, whether it's a horizontal ray tool or the trend line tool. It doesn't matter which one of these you're using. Levels are levels, trends are levels, and so are levels. Everything is a level on the chart. So don't get too hung up on, hey, he said level, but because they're all levels. So now we've got a 4-hour level here that hit. We've got a 4-hour trend. We've got a 4-hour trend on the bottom, but no real 4-hour level hit. So now we need to start looking for our hold level. So now we've kind of defined the parameter of what we expect to exist. Now, if we break this trend, we're likely going to break this range. So we know that we've got to stay above this trend line. And the same thing here. If we're going to go attack some of these levels above here, well, we're going to need to do so by breaking this trend here. And typically what happens is you're going to have move bounce from piece to piece to piece to piece inside this trend until something gives and a piece breaks, and then you either move up or something gives on the way down and you break this trend and then you move down, right? So this is kind of the idea of the trend work so far. Now, I know I said never to work up, and we're not going to work up in this example, but some of you might be wondering, hey, Cotton, why didn't you start at the daily? Because I knew that there wouldn't be enough data between this couple days that have passed to use the daily time frame. 3 candles is not enough. There's no hard set rule of how many candles it has to be, but when we visually look at the 4-hour chart here, we can see there was a bottom with a blue candle, so a distribution candle. It had moved away from that, gone up, tested a level, and came back to create that. So the 4-hour time frame is enough here. And let's keep this level on the chart, because I think this would pose as a pretty good target for a trade on the 4-hour level. I also feel like there is another trend that I'd like to draw from this distribution candle to this one as a larger trend on top, and this would be global to this candle, which would be local. So local is always the most current information. Global is the information that fathers the local information. And then legacy information is the grandfather to the local information, or the father to the global information. So it's kind of a hierarchy of things: grandfather, father, son, grandson, et cetera, et cetera. Keeps going. Just a nice easy way to refer to that as. And then I'm going to do the same thing here on the bottom. I'm going to put a global trend attached to this local trend. Now, this global trend is not attached to this local trend, but that's fine, because this is what we call a range trend that is inside of the range. And this is what we call a just regular trend. So range trends is something that we will talk about a little bit in the next session here, because range trends are another big one. And range trends is going to be something that something that'll be a huge part of what we do. And Yep, let's not worry about that now. Let's not mark that. So we've got our trend work done. So we've got a few bigger trends out here. We've got this larger trend. We've got this trend out here. When a trend breaks, it exposes whatever part of the range it's protecting. So the first thing we need to know about a trend is if it's set from here or from here. If you were to come out to these moments here, let's say you get to the very end. When you break this, realize it's exposing these levels to be attacked, or it's exposing these levels to be attacked. So if you have already hit a level once, don't expect it to hold. The levels typically are only going to test once. Now they can test multiple times. This is where you get origin levels. This is where you get other things called reverse levels and other stuff we'll talk about in the future. But a general rule of thumb in day trading is levels are good to be hit once, but don't expect them to hold the second time. That's not to say they won't. There is criteria that allows us to say, hey, this will hold a second time. But as a general rule of thumb, we look for untested levels. So if we were to say, hey, we think this is going to continue moving up now, we've got our 4-hour levels, we should look for an untested level somewhere up here at the top of this range. So we're either going to try to get the actual trend itself. So if we were to take a long right now, we would either try to hit the trend itself and exit our trade on trend, or we would look for a level. So what we're going to want to do is we're going to want to just start working from this candle down. Let's assume we're trying to find a move up. We're still inside the range. So I like that. I like that we're still inside the range. We have our trend work done. We need to find hold levels, origins. We're kind of going to be in a Pandora's box now because we've got two trends that are going to be bouncing back and forth. So we need to identify the levels and start looking for front and backside holds. So we have nothing on the 4-hour chart right now. We could potentially be creating this as a 4-hour level, but if you look over to the right here, we still have 3 hours left. So we've got quite a bit of time before this could possibly turn into a 4-hour hold level. So I don't really think we're going to be taking this one too seriously, but it is there nonetheless. So let's go and look for hourly information then. And if you remember from earlier in the video, that's where you got an untested level right here, and you had the hourly level. So the next thing we can do is simply go for the next hourly level. So this would be a great short target, or it would be a great take profit target in this trade, right? It would be a great spot to take profits. So we have 16 minutes before we have an hourly hold level created. So I think like a good strategy right now is that we hope that this gets created, because remember, if we are looking, and I'm going to take the replayer tool back to here for a second. If we were looking for this level to get hit in order to take a buy on it, well, you would say like you can hit either the wick or the body of the move, and either one is going to be testing the level. These are both testing the same level. There's no difference. You just ask the question, is the level tested? Yes or no? Right now it's no, so it's going to stop either at the wick or the body. The body represents the greedier spot. Again, we talked about greedy and strong levels. The top of this, just like the backside levels, the backside represents the strong level, so does the wick on the front side. The body of these candles represent the greedy side. So if we were to say, hey, I know this is moving up, I know it's going to target the hourly candle, let's just buy the wick. Well, we can do that, and then we can see what happens. And the wick moves up, and you get a pretty nice reaction there. So kind of the point of showing you this was to say, hey, if we know that's going to be created, and we were in this moment here where all we had was a blue candle on our screen, we know that we're going to move up and then come back and test this. Well, if we could get anywhere in below here, it means we've got even better entry than what our hold level can provide. So there are going to be some cases where you can say like, hey, we currently have a blue candle. It would be really smart, because if the lowest it can go would be this right now, well, technically we're underneath that level. So like this is going to be a cool level in about 14 minutes that we could possibly buy. So now we can start going into some of these lower time frames and looking at where a smart buy might be. So you've got a 5-minute level here. So let's see, you got a 5-minute level here, and look at that. The 5-minute level was just hit. Oh, we just missed it. That would have been a great entry spot. So the 5-minute level here holds. And the idea is that you entered the 5-minute level and you're trying to get above this hourly, so that in the future you've entered here and you're fully protected. You get above this level, and in the future it'll come back down. You're still in profits. And if it starts to not be able to hold the level, look, you can exit your trade, because you can say, hey, this level's failing. It's not holding. I'm still in profits. This was a perfectly safe trade. I lose no money, and I still get to take the chance to take this trade. Now, you might even go lower in this trade. We can analyze this as we go on in the video. You could also go to the body of this, or you could go to the break level. So I think there's a few different levels here that you can try to target. And I think the way that you choose the correct level is you just start measuring what the difference is. You've got a 16% difference here if you are on 100x trading. So this is 0.16, but I am a 100x trader, and that's what I train people at. I don't know if it really makes sense to hold out for 16 more percent. Like, it's okay. It's kind of right on that line. I think for this video, we just say, hey, we're in the trade right now. We just took the 5-minute level. The objective is to gain this hourly, and let's see how this plays out. So right now, what we'd really like to see is we'd like to see this thing kind of flatline for 13 more minutes. Because if this candle turns white, then our hold level is actually all the way up here, which is like, not exactly what we want, but fine, because we want to be in this with an established hold level so that it's moving up. We don't want this candle to turn white, because then we actually have to get all the way up here before we kind of create that safety net. If this candle were to turn white, right? Like if we were to close. So there's kind of a point to this trade where you're almost in like this gray area right now. You've gotten a great entry on the trade, but then at the same time, you don't really want it to move up yet. But if it moves up, you want it to really move up, because then what would be this hourly level right here that you're saying, oh, I hope we create this level. You'd want to have it actually create here instead. So this would be an easy level to gain, because if you flatline for 12 minutes and 20 seconds here, it would take almost nothing to get over top of such a critical level, 0.04%. We're talking about almost you sneeze and you're past that. So kind of you were asking for a lot here, but this is the game of day trading. You get into these extreme scenarios with insane accuracy. And if you look at the 5-minute hold level, the level that can hold the chart, look at the accuracy in that. You're 0.00%, this is not even measurable on the charts. It's not even measurable as a 100% until it grows about 4 times that. So if you were to buy that 5-minute level, that would be, you'd be in a good spot. So then what you would hope to see is that for the next 12 minutes, it can kind of just go to this 1-minute level. It can hold this 1-minute level. It goes down here, it holds this, and then it can move up. And that's not to say, again, it can't go for a greedier part of this level. But if we were using all the information right now, this is how we'd be looking at a trade. So that everybody should be able to keep up with this methodology, the idea of what I'm doing in this trade, and kind of what it represents thus far. So we've kind of got a good entry on the trade. We've looked at this hourly level being created. You've got also a 15-minute here, which would be another nice step to gain the 15-minute. You're building up in time frames. You've bought a 5, you gained a larger time frame at the hourly here. If that doesn't pan out, at least you've got the 15 here, which we would turn green and say, hey, here's a 15-minute level. And then maybe even we can go like this and say, hey, you've got a 15-minute level there. You've got an hourly level here. This is starting to become some pretty good spots that will end up supporting the move. So we're going to leave these here for now, and 10 more minutes until this closes, and we'll come back in 10 minutes and check on exactly what happens with this trade. And in the meantime, now we can go and we can say, hey, where's our targets going to be on the top? Look, we're inside the range. We've been compressed by trends, and we're within the rights of the trend. So we've got our trend work. We know we're not going to get above that yet, or we don't know for sure, but it would be a good assumption to say, hey, if we've entered here and we're using 100x, this is equal to 450%. So this is a great target. I don't really know if you have a need to push it further. So if you use $100 on this trade, you just made yourself $466 in profit. You'd end up leaving this trade with $566. If you use $1,000 on this trade, this one trade would garnish you $4,666. Like they're good trades. If you go to trend, it's a little more. And if you start breaking above that, you can get in some pretty wild percentages. So I think this hourly is a good target, but let's keep going down the path of finding more targets. So we also have a 15-minute level here. So this is where things are going to get a little interesting, because you've got a 15-minute level here, but actually, if you look at it, the wick itself is right here. So remember, even if the wick or the body is tested, you've got the level is being tested. So what do you do in a situation like this, where you say, hey, you've got the wick and the body here all in the same, but they're kind of, the smaller time frame is in front of the bigger time frame. Well, what you would do is you take the bigger time frame and you'd also move it down to the wick. So you have 2 options here. You can blindly say that you're going to exit target on the body of the hourly. If you add that 15-minute level, you're going to see that the 15-minute level is in front of the hourly. What you would do is you take that hourly level and you'd move it to the wick, so that you can see the bigger time frames protecting the smaller time frame. So you can say strong level, greedy level, greediest level, and then you can keep going down to find more and more levels here. So then we can go to the 5-minute and say, hey, is there a 5-minute level there? There is. It's even greedier. You got a 5-minute level right here. So you can say, hey, look, there's an even greedier level right here, which is the 5-minute hold level. And then on top of that, we've got the 5-minute break level here. And does this end up being not a 15-minute break level? Does that end up being an hourly break level? It does. So now you have an hourly break level as well up here. So now we can actually make another level here, the hourly break, right? We've got the 5-minute break, we've got the hourly break. And again, the bigger time frame is protecting the smaller time frame. So big time frame, smaller, smallest. Big time frame break, smaller time frame break, or possibly smallest as well. Just check down here, see what everything is looking like. It's looking good. Still 8 more minutes. And now, so we've got an array of targets. So how do you pick between them all? Well, you can simply measure the distance between them all and ask yourself, is it worth to stay in this trade for 50 more % profits? So let's say you used $1,000 on this trade and you entered from here, and this was the lowest amount you're willing to take, is 441%. So it's $4,411 enough in this trade if you were using $1,000, or do you need to hold out for more? Is $5,000 enough? Well, I think to surpass 1, 2, 3, 4, 5 levels, I don't think it's worth seeing if this thing is going to continue to push 4 additional levels for an extra 50% here. I would be happy with the 440% profits, and I would lock that up. Beyond this, I would start looking at up here. So if I wasn't going to take my profits there, what I may do is I might just go to the next range, and I might just say, okay, like it's not, if I'm not willing to take 440% here, but I'm willing to take 500% here, which is just an extra 60%. It's $600 more, but you already made 4,400. At this point, I may push into the next part of the move and say, look, I want to make $7,000 on the 7%, or even into this and 7,600. I think I wouldn't even go that far. I would just say, like, I want to make $7,000, 700%. So the difference between the first level here protecting and this, I think that the difference isn't worth it. I think 4.5 versus 5% isn't enough to warrant the extra risk you would take of this thing potentially hitting the move and pulling back. Because what can happen is you could go like this, and it's like, oh, we're going to reach that target, and then it sinks straight down, just like it did here. And then you lose all, just like it did here. Then you lose all your profits, right? So it's a balance between understanding what the best scenario is there versus the risk you take, right? So then even going back here and looking at this trade, well, we're still kind of in that spot. And ideally, the best case scenario for us is to create this as a blue candle, but it's starting to creep up into the territory of white. So now you'd have to create this one as blue. But again, the biggest, just like we did on the top. Now think about this for a second. Biggest time frame, next smallest time frame, the actual smallest time frame, or the 5-minute here, which is a smaller time frame. So you're doing the same thing, using the biggest time frames and finding the smaller time frames underneath them to find out all your targets, and then measuring to see if it makes sense. So all we did here was we marked the range, we marked our trends, we made a logical assessment of, does it make sense to buy this level down here? And we'll find more advanced ways as we continue this video. We've made a logical assessment to say, hey, does this make sense? Yes or no? Okay, let's buy that level. Let's set our target up top and let's exit the trade. I think one more note that I would say on this is you could go right here and you could say, hey, look, there's an origin level here. I think this is a good target. And I would agree with you, actually. I would agree that this is a good target. So I might even cut down the need to get that high in this chart and just take 275%, because day trading is not a game of big wins. It's a game of the most logical positions on a consistent basis. You are going to make more money in day trading by taking trades all the time on a more frequent base that are well thought out, logical trades with reasonable exits than you are trying to swing for the fences every time. You're not going to get rich by swinging for the fences. That kind of idea that we see on social media where somebody made $5 million in a trade, it's very rare. It's rarer than winning the lotto. There's more lottery ticket winners than there are GME long trade winners. So keep that in mind, that the idea of day trading is to have consistency every single day. So if you want to make $200 a day, then aim for 500 and make 500 a day. You're not gonna get riches by swinging for the fences and taking one trade where you make $500,000 once in your lifetime. It doesn't make sense. It's not sustainable. Go for accuracy and proven results time and time again. All right, now that we're done with the advanced section of this video, let's move on to the pro section before we get to the master's level information. Now, we are going to be talking about analyzing a move. Now, the best way I can describe analyzing a move is you are constantly going to have to do your work and find all the information on your charts that is relevant for you to understand what is going to happen next in the trade. I am going to give you a lot of different tools to use, and you can't simply sit there and say, hey, this is as easy as ABC, 1, 2, 3. Here's the setup, and the same thing's gonna work every single time. You will need to work on something called logic flow, and logic flow is the flow of logical information as it pertains to continuously charting trades. You have to understand, and I'm gonna give you dozens of things you can use, but it's your job to constantly mark out the different information on the charts and to then understand what it is you're needing to find in the charts, what it is you're needing to look at, and then to understand which tool is applicable in that moment to chart and trade the right information. So I am going to explain this in about as simple ABC terms as I can. Imagine you're a construction worker with a trailer full of tools, drills, saws, levels, hammers, crowbars, you name it, you've got it. A concrete whip, it doesn't matter. You name it, you've got it. If you are laying shingles on a roof, you wouldn't take a concrete whip or a paintbrush onto the roof to lay shingles. Well, you might use a paint roller for tar, but that's something completely different. You use the right tool for the job, and this is what we do when we're talking about analyzing a move. We simply need to understand what the right tool is for the right job. And I'm just going to give you a few quick tips to help you with that logic flow. Now, logic flow and analyzing a move are the same kind of thing. It's the reason I call it logic flow. It's a flow of logic. It's what we need to do. And I can't possibly go through every single scenario, but I can give you a few quick tips that will help you. Number one is you're going to want to look at what happened previously to understand what's going to happen next. And what I mean by that is if I could sit here and say, hey, let's look at this part of the replay. Is there a 15-minute level that was hit? Let's see. Nope, there's no 15-minute level that's hit. Well, it's hit right there, so maybe there is. And then we're going to go to the next part of this move. Hey, there's a 15-minute level here, so maybe it's not a 15-minute level. Let's go to the 5-minute level and see what we can find. No, there's a 5-minute level here, and let's color code this. This is green, right? And that one was hit, and this is orange. So let's find which one of these two levels was hit, if it's either of them. And it might not be either of them. Nope, it's neither of them. So we have to continue to go back and look at more information to try to find out, hey, what level is hit? And again, this is part of doing that flow of logic. What about an origin level? Let's try to mark that. You've got a 1 hour origin level here, right? Or sorry, this would be a break level, not an origin level yet. And let's look for another 15-minute level. You have also this 15-minute level right here. Well, let's see which one of these two are hit. Aha, so you have a 15-minute level hit and then an hourly level. So if we were to go into this replay and say, look, we have a 15-minute level hit, a good way to do logic flow is to just say, hey, already we see a 15-minute level hit. Let's use the next one, set a buy on the next 15-minute level. And that might be a good place to start with some expectations. You're just kind of taking what has happened in the past and looking to see if it can hold up the move in the future. And then you hit an hourly level. So let's go take a look at hourly candles. Aha, so now you'd have to sit here and say, well, if we want to have the hourly level get hit, and then we need to get above this level because this would be your hourly level. So if you were to go back to this moment in time, you might see that you have the, let's go to a bit of a bigger time frame here. You might see you have the hourly level. And once you get over top of that, you're going to move straight up. So that's kind of what we did here. We took the 15-minute level because it was hit in the past. And then we took this 15-minute level and bought it. And this hourly level here didn't really have any relevance to it. So we simply didn't use it at all. But we can see that if we look at this and we can say, hey, that 15-minute level was hit. Look, here's another 15-minute level. You can buy that and you're kind of off to the races, right? So that's one way you can analyze a move and do logic flow. And then another way you can analyze a move is you can say, hey, I've got a 15-minute level down here. Let's find the highest 15-minute level we can on the move. So let's just start from up here. This is kind of the different ranges in the move. So if we were just to mark out the ranges, we could say, hey, this is a range right here. So you look for the 15-minute level in this range. And then if you were to go up even higher, you would look for the 15-minute level. I'm going to go back up to this range here. I'm not going to use this one because this looks like it was testing something here. So let's use these two here and see what kind of 15-minute levels we hit. So the first one would be something like this guy right here as a 15-minute level. And yeah, that got hit right there pretty perfectly. So that would be one spot you could exit your trade. And where's the next 15-minute level? Can we reach all the way up to here? Right. So you just taking that information and mirroring it on the other side. Now you see that 15-minute level pulled it back. And that was a pretty perfect example. So actually 15-minute level to 15-minute level worked out, well, pretty good. So this is the thing about analyzing a move in logic flow is that you have to just start to get your feet wet with understanding the different ways in which analyzing a move and using which tool for the job makes sense. So, when we're talking about this, that analyzing that move, that's a pretty critical thing. And you're going to need to go through all of my lessons on YouTube to understand analyzing a move more and logic flow, because we just simply can't cover it in this one video. There's literally 10, 20, 30, 40, 50 hours on analyzing moves and logic flow of content. So you're just going to have to delve deeper into that. Now, the next part we're going to be doing and talking about is called laddering. So laddering is when you have a move and you are continuing that same direction by laddering the move. So laddering looks like this. You have the low of a move here, right? And let's delete this here. You have the low of a move there, and then you ladder above it. So laddering is constantly getting above the move. So if we were now to come down here, you might want to use this hold level and say, hey, here's a hold level on the hourly time frame. And we want to just simply ladder above this move. So laddering is when you are constantly having, if something goes down to a low point of this, you need to ladder above it. So you need to take that, and you need to be sure you're not hitting the actual level there, because if you were to hit this, you're actually hitting a break level. So laddering would be just going slightly over it, which is what you see here. You see this ladder, this part of the move. And then the next piece of this so like this right here, this laddered it. This right here, the next part of the move is you might come down here and put a buy spot right there, because you are laddering the move. So this is laddering, and it's important theory to know, because when you are laddering a move, what you are doing is you are protecting break levels. And when you protect a break level, like if you were to protect this break level, you can never actually hit that and break the charts down. So if you start laddering a move, it's more indicative that you're moving up against the range. So for example, if you were right here in the trade, and you said, oh my God, I just laddered the move. Well, all of a sudden that range is likely going to break. So your range would have been something like this right here, right? So your range would have been from the bottom of this to the top of that. And this is laddering the move. Therefore, you should theoretically get over top of the point that brought you down there. And so you do, you get over top of it. So the next piece of this is, if you were to go and ladder the move down here or right here, you could assume that you would now get over top of this. So you might, end up somewhere in here. So if you come down, ladder this move, the next time you're going to come up to some point up here, right? And so forth and so forth. So that's a part of laddering moves and what it looks like. So you need to be able to make sure that you're laddering these moves, and that when you are, you're kind of breaking over the previous high points, right? And we also have what's called polarity. So polarity is another very important topic that, again, in this video, we couldn't possibly go over the entire thing, but polarity is your defining moments in charts. And polarity, and one form of polarity that I will explain in this video is break levels that turn into origins. So for example, I can see one right on my screen right here. Here's a break level that was in the past, and this is polarity. Polarity polarizes your charts to stay on two different sides of the chart, right? Like this is everything that you're going to see on the charts about moving up or down in the move. So if you have polarity in a move, this looks like an origin level. And there's many forms of polarity, but you see how this was once upon a time a break level. So right here, and let's walk through this. Right here, it's a break level. It hits the break level, indicating that it's moving down. The next time it hits it, it's going to turn into an origin level. So there's that hit right there that now turns into an origin level. And on my chart, I like to use dashed lines to indicate origin levels so that I know they're polarized moments. So this is very straightforward. If you stay above this, you're going to skyrocket up. If you go below it, it's going to come down and go straight down. And then in the future, when you come back down, you're going to hit those moments of polarity and continue to bounce either direction off of them. So polarity is something where two sides of the chart can exist, but nothing else. It can't kind of go like this, and it can't kind of come up and down and up and down. Otherwise, it's not polarity. It has very specific and very exact criteria that it must stay above or it must drop below. So like if we hit play here, you're going to see it's going to try to stay above. And the second it gets below, it goes way below it, and it's going to have trouble getting over top of it again. So polarity on your charts, and there's different forms of polarity, but polarity on your charts is a move in which you just can't get back over top of because you went underneath it and the move polarized itself, right? And so again, there's many forms of polarity. Origin levels are one of my favorite because they're so easy to spot, see, and find. They offer great opportunities to buy and short, and or long and short, I should say. Now we're going to talk about range breaking. Range breaking is when you have something like this. You've got your range and you break below it, right? So a good example of a range break would be, let's go find one. This is a good example of a range break right here. So you have something like this where your range kind of looks like this right here. And then this broke above it, right? Because you broke above this range right here, this top of this move, by hitting some kind of level. Now, I'm sure you have some kind of level in here. We don't need to go and find it. I'm sure you have some type of level here that got hit. And when this breaks over top of it, you kind of reset the range to this. So this is range breaking. It's when you break a range and you still have the base of the range. So the base kind of is acting from down in this region here. So this is kind of the base of the range here, right? Like the bottom of the range. And when you break over top of it, it resets the range and goes to a higher point. So now what you have to do is you have to kind of break over this point of the move right here. And that would reset and break this range. So then here would be another spot where it happened on the bottom. So now you've gone so far below the range that you've actually broken the range and you're quite a bit below it. So it's about expanding and contracting ranges to get them to make sense so that you can further your development of the move. So when you break a range or when you move above a range or below a range, what's happening is you are redefining that box or that parameter. So if you are drawing a box or parameter around something, breaking that range is resetting it and finding the new levels that make sense. So for example, when the range looked like this, and let's take the replayer tool and put it right here. When this was the range right here, I'm going to put it right there like that. When this was the range, the only levels we really had were maybe, and I'm not going to change timeframes. I'm just going to use what I see on my screen. Maybe this one has an origin here. And this one is an origin here, although that's hard closed and broken. So maybe you have some type of level here on a different time frame. So we're going to kind of just mark these and just say, here's the range. This is what it is. I can make my trend work. I can do all that stuff based on this. So my trend work is going to be like distribution to a distribution candle like this, and then some form of accumulation to accumulation candle like this. And again, I'm not changing time frame, so I'm not worried about accuracy right now. I'm just worried about explaining the theory. So you have your trend work, you have what's defining the range, and that's it. And so fine, you go and you test that part of the range. Aha, you've now broken down to some lower part. So there's some type of level in here that you've now reset your range to understand the barriers and now of the range. You're expanding it. You're expanding it to this, wherever that level that was hit. So if it was this level was hit, you're expanding it to that level to understand that your levels are now opening up. Because if your range was right here, you wouldn't really want to go below your range buying levels. But when you break your range and reset it, you're going and expanding that. So you've got this here, and let's see what happens next, right? So you can see you're just constantly holding that part of the move, and that's fine. You've expanded that range, and now here again, you've hit the same thing, and look at that. You hit your trend, and then you pull back, and here's another good example. You've expanded your range to hit some kind of level in here. So now you can go like this and say, hey, look, my range is now expanded to here. I think the next part of the move that I need to focus on is something like this, right? So now your range is expanding and getting larger and larger and larger, and you're going and you're making new trends, something like this to this right here on this side. And, then on this side, something like, what I'm going to do is I'm just going to mark these. I think it's going to be a different time frame, but something like this on this side, you've got, this may be 15-minute range or whatever. Again, we're not focused on changing time frames. Now you've gone below your range again. So now you've hit this origin down here. So now, once again, you're expanding your range to understand what time frame and information is important. So then your trend here looks like it's still intact because it didn't hard close, and we can just hit continue on and see what happens here. Looks like it's hitting the trend and it's hitting your level on top. So you hit your level on top, you hit your trend on bottom. Our accuracy is pretty damn good so far. And then again, we expand the range into the next part of the trade. Maybe you hit a break level here to try to break the move up, but now the range can expand up to here and reset to even more important information. So now we would move our trend work maybe from here to something like this, because our range has expanded and reset, and we're getting new parameters based on the part of the range that's being attacked and moved. And so then you see you break over top of the trend, you go up, you hit this trend here, establish that trend, hit this trend again, establish that, move down. And you can see how that range would constantly expand and reset its range before taking some of these moves up or up or down. Yeah, and then you break over this or under it, I should say, and et cetera, et cetera. So we can just actually pause this here and continue on. So the last thing we want to talk about is deep diving and range trends. So there's two more things we're going to be talking about in this pro part, and these are all in their own right, something that deserves to be studied on their own. But let's talk about deep diving. Deep diving is when you have a target on your chart. So for example, I'm going to use this level right here. Again, it might not be accurate, but looks like it'd be a good candidate to talk about deep diving. Maybe not actually. See if this goes down. Yep, it does. Does it come back up? It doesn't. It actually uses that as polarity. Looks like it came back up. No, not a good situation. Let's find a good deep dive target here. Where can we find one? Here's a good one right here. So you've got a hold level right here, right? And so let's delete this. Let's use this guy right here as the level, and even possibly we can go down and see if there's a lower level to be had here. So let's maybe just go to the 5-minute level and see what we can find. And so we have a 5-minute level right here, right? And so you got your 5-minute level, and this is a really good example of deep diving a target. Maybe we could even take this further. Maybe let's even just keep getting greedier and greedier, and maybe we can even go down in time frames even more. Let's see what the greediest level we have is here. Let's go zoom this in. Here you go. Here's a 1-minute level. You got this one here, and you've also got this one right here. So these are both 1-minute levels. So let's make them both white so there's no confusing them. White here, white here. And hopefully we'll have a deep dive target here. Let's just go forward into this trade. Yeah, we do. That's perfect. So this is what we call deep diving a target. You have levels, hold levels, etc., that won't always hit perfectly dead on. Now, for the most part, these hold levels, they should hold, but you have to sit here and say, look, here's the level that I expect to hit. Here's 2 levels. So in theory, you could set one buy right here. And if that doesn't work out because it's kind of moving down, you could get out of your trade over here, break even, and then set another buy here. But the thing you need to pay attention to is that this level, like with all levels, needs to actually hard close to be invalidated. So that means it would have to close a candle underneath it that would be this on this side of the chart's distribution. Because if you're trying to go for a long, it would be a distribution candle moving down, and you have to close the top of that. And go back and look at the hard close part of this if you want to understand more about hard close earlier in this video. But you need to hard close under that level, because really the thing is, you could go here to this target, go below it, and you know, your candle could be right here, right? Like you could be right here on the bottom side of the candle, which is this right here, hasn't closed yet. So you're sitting here and you're crawling up and you're crawling up. And so you don't actually have a hard close candle, even if these are white candles, because they're slowly crawling up, right? They're slowly crawling up like this, and they're all white candles. This is called deep diving a target. You haven't hard closed the target yet, because actually you'd have to have a blue candle. So if the bottom side of this candle was that side right there, you would now have to have a blue candle like this. This would be the bottom side of the candle, therefore hard closing this level and invalidating it. As long as you don't have a hard close on a target, you can deep dive it. So sometimes you can take your targets here and go a little deeper and maybe set your buy like right here, maybe set your buy right there. So like if we were to take 2 levels here, and we were to do this and say, set my buy here, deep dive this target. And you would do this only to reduce risk. You wouldn't do this as just like a value added proposition on every trade. You just do this to say, hey, I think this trade's a little bit risky. I do feel like it can deep dive. Let me look for a greedier target. And then you could get a little bit of a better entry on each trade by doing that and deep diving that target. Like on this one here, you got 7% better entry if you're on 100x. And on this one here, you got 6% better entry if you're on 100x. And so that's what deep diving is. Realize, like this candle right here, for example, this right here, actually we need to leave those two. This candle right here, never hard close right here. This blue candle here hard closes this level. So at this point, if you were here, you're saying, hey, look, nothing's hard closed yet. It can deep dive. As you go on and you're like, oh, this one hard closed. Maybe I need to go a little deeper on this trade. Let's set it right here. And oh, looks like I just missed it. So if I actually moved it up and set it right there, would have got perfect entry. If I made it even a little higher, a little less. But realize that the fact of the matter is that unless that hard closes that level, you can fully deep dive targets and you know, go for a little bit of an extra couple percent. And typically that's, you know, the case is going to be where these levels get respected almost every single time. Like, you know, pick a level and it's going to get respected. You know what I mean? Like this is going to happen every single time almost. So yeah, be careful with that. Trying to sit there and say like, oh, you know, like I'm just going to constantly deep dive targets. Like these levels, they do get respected pretty well. You know, a good one would be right here. Sorry, right here. This is polarity of the move. You can see that was an origin. Look how perfectly it's being hit here and here. So you're not going to always get the chance to deep dive, but it is a possibility. And the last thing we do is have what's called range trends. And now range trends are interesting because they're trends that help you understand where a move is trending within its range. And so you have normalized trends, and normalized trends is just when you take 2 candles here, you know, you got a white here, and you know, you can keep adapting it out to these candles, the white to the white on the top or the blue to the blue on the bottom. And we can even go to a smaller time frame, but a range trend has trends that exist before that. So like a good example here of a range trend, I'm just going to use this section of the chart here because it looks like we're already past this and we can kind of see the result right now without having to wait for this to be completed. So this would be a range trend right here. And so when you get over top of this, you should theoretically move up. So when you get over top of this, you should move up. And then, you know, you're going to have a range trend down here too. And it's going to be something like maybe this guy to this guy, because the range trend isn't always about finding the perfect bottom of a move. It's about understanding and finding, and you can see right there, it's tested and fails down and etc. A range trend is about finding the trend inside of the move. So you're going to have regular trends, and your regular trend would look like this, the very bottom of the move to the bottom of the move here, assuming they're both blue to blue. And then your range trend, what you're going to do is when you test your level, so for example, we have a 15-minute level right here, you can make a range trend based on that. So what the kind of the trick here is you test the level and that becomes your base point, and then you test your next level and that becomes your reach point. So we're gonna look for an example and walk through that. So this is your hourly time frame, and you need to have blue candles to blue candles here, because on the bottom side we're going to be using blue to blue candles. So it can't be the hourly here. So we can see this is a white candle, this is a white candle, it can't be the hourly. We go to the 15-minute. What does that look like? Okay, so you have, this didn't test the 15-minute level, although the 15-minute level is all the way up here. So technically this did test the 15-minute level, right? But let's take the replay tool and keep investigating here. What about a 5-minute level? Where is the level that's tested? Here's a 5-minute backside right here. So you got a 5-minute backside right there that was tested. So you see you have a 5-minute backside level here. It tests through and holds the move here. You've got a blue candle here, right? And so let's change this to orange because it looks like we found the right time frame. And let's change this trend to orange because this is representing that trend in the right time frame. And you've got, zoom out to keep finding this thing. There it is. And you've got what is a range trend. So now this range trend will allow you to understand that this trend will protect these pieces of the range. So if you were to come all the way up here, over here, zoom out a little bit. If you were to continuously move up and up and up and up and up and up and up, and then you broke this trend, it is exposing this part of the move. So now you will be looking for a buy down there. So if we go down to this and we mark that 5-minute level, we should see when the trend breaks what level is targeted next. So let's just hit play here, see how this plays out. I think we can speed up the time frame a bit. Come on, Bitcoin. And you could have other range trends in here, by the way, that break and don't protect the move, right? Like you could have other range trends here. And there's the break of that move. There's the break of that range trend. So we can actually go to this now and we can take a look at what had happened here. So you can see where this, when this range trend breaks, you can see it clearly tries to hold it. So like if we were to go to maybe a 1-minute level, you can see it clearly fights with it. And then if we were to go to a 5-minute level here, you can also find either the 5-minute level is going to get tested or your backside's going to get tested, one of the two. So you can see the backside of the level got tested there when the range trend broke. And so that would be your next spot to long. And then you can see that completely goes up. And even here, you can see the other part of that level break, it goes and it breaks a level there. And so that's how your range trends work. And then you can do the same thing if you have different time frames. Like if you were to test a 15-minute level here, you can now make a range trend right here. Look, oh, you tested a 15-minute level. So now you could go and say, hey, look, you've got two range trends that can be happening here. You've got this one right here. And then the next part of the range trend you do is you would pin it to that. Well, there's no blue candle there, but let's do it anyways. Just to show you guys the principle on the way that this would work is you can see when you break this trend, although it would actually have to be this candle right here. It would actually have to be this candle right here or after it. So this one here, one of those two. Typically we wouldn't go in front unless this had tested the level. We'd only go behind it. So this had tested the level. This is the next low. You can see that range trend on this 15-minute right here like this. You can see this range trend, when it breaks, it goes back and tests this 15-minute level where that started, because that's what you're doing. When you break a range trend, you're exposing that part of the range. And so then you could go like this right here, and you would do very much the same thing. So you can delete all of this range work here, and then you can go back to this 5-minute level here, and you can say, yeah, this looks like a good buy right here. And you can see right there, it ended up being almost like the perfect buying spot right there. You can just hit play here, let this run out a little bit. Let's go to a bigger time frame here. And then when this breaks, it would expose these parts down here. I'm not sure if we're actually going to see this break, but let's just keep watching and see what happens. Let's go to the hourly charts here. Maybe speed this up a little bit more. Well, I don't know if we're actually going to... oh, actually, we will. We'll come down and break this. But I think at this point, you wouldn't be using a 5-minute trend. You'd be using something a little different, a little more longer term. Come on, Bitcoin. There it is right there. You can see where it hits right there, tries to bounce off, tries to hold its move up, and simply can't move up. Therefore, when this breaks, it would be exposing the bottom of the range, which is this stuff back here. And then you might even have this trend here. You'd have to go back and do more range trend work, but you can see where you were to go to like a 5-minute chart or something, you can see where it tried to hit that trend and hold, but it actually fails the move and then creates it as polarity, because range trends can also be polarity. So we talked a little bit about polarity before. Range trends can also be polarity. See how this one down here, this trend is holding and now it's completely moving down and you're just kind of in the sinking move. Could possibly come back up and test this trend if it is indeed the range trend, but you can see where it tries to hold here, it tries to hold here, right? And there you can see where it goes back and tests that polarity there. So range trends are really neat because range trends give you the ability to make smaller trends on more internal parts of the move that allow you to continuously see if something is ready to move up or down, right? You just change this to a bigger time frame and just let this play out. And you can see how much it struggled to get back over top of that. But look what happens when it does. When it gets back over top of this polarity, remember how I said polarity exists on one or two sides? You delete this real quick, gets back over that polarity, just skyrockets straight up to its level, right? So you can see right there, it's trying to break up, breaks above polarity, and completely rips its move up. And this is the thing about range trends, is that the ability to be able to see range trends and mark them is a huge feat. Even here, I'm just going to make an assumption that the range trend, this would be your normal trend right here. You see what I mean about how this would be a trend right here, like a normal range trend right here. And you would get to that point and you would, once you lose it, it would completely break down. Now, you would have to go and do your technical analysis work and go in here. And, the way you would do this is you look at what level it got hit in here and what was holding that up. And you could have even been back here somewhere. And I'm not going to sit here and do all this work on this move to go and find it, because this video can only be so long. But this could also have been the part of the move. And you might have had two smaller range trends here that gave you that information. So range trends can be pretty powerful. As you can see, they usually test perfectly. And when they get over, they try to move over. And when they get under, they try to get under. And then you can see, well, it looks like this one we had already marked. So range trends are pretty powerful. And I think that's good for this part. Let's move on to the master's level information. Okay, let's move on to master level information. So we are going to completely remove all drawings from this chart and get right into it. The hardest stuff that we could teach. And this is by no means the end of the knowledge that I can teach. I've picked a certain point of this video that I would like to take it to before I feel like the information gets counterproductive and there's just too much information in this video. So realize we have went through a total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm not sure how many. I'm not going to sit here and count, but it's got to be close to 40 or so different theories on the charts. And it'll be up to you to kind of use them as how you see fit. And I'll do my best in one video to teach them all to you, to equip you with the best information so that you can start your day trading journey out. And you need to go and watch my other videos. And we'll talk about that at the end of this video. But let's just get into the next section here. This is the master's level, and this is going to be a big one because we've got a lot of stuff, and I'm just going to get right into it. Okay, the first one we're going to tackle is reverse levels. Now, reverse levels are something that it's a hold level that's been moved through and can therefore act again in the future as a same buying situation. So let's go here. Let's try to find a reverse level. And what we're going to do is we're going to start with our hourly. I'm not going slow on this. If you're not keeping up at this point, go rewatch the video, come back to this section. We've got an hourly level. Let's move it down, find the 15-minute level. Okay, good. We got a 15-minute level. Let's start with this here. We've got a 15-minute level. Let's also go look for a 5-minute level. We do have a 5-minute level here. And let's just leave it at these two for now so that we can see where these levels line up. So what we're looking for is now we're looking for a reverse level. So a reverse level is when you have a level that's wicked through the move and you are looking like these would be reverse levels now. So let's go into this in the moment. So you have a 15-minute level here, right? So let's go to the 15-minute time frame. And assumingly it's going to go straight through the level, right? And it does. And it doesn't hard close a level. So that's the criteria. You have a level, it doesn't hard close. So now you can rebuy this level a second time, because if it's not bouncing off the level like this, you can go and buy that a second time. When you go through the level, typically what you're doing is you're testing a lower level. And even that, in that move, we'd have been testing a lower level and a lower level and a lower level. And actually right here is a 15-minute break level. So we're going to put this as a dashed line to pretend that in the future it might act as an origin, but both of these levels can be bought again, the 15-minute level and the 5-minute level. As you can see, The 5-minute level here acts as a reverse level. The 15-minute acts as a reverse level. The 5-minute would have been the more appropriate level here. It's a bit of a greedier part of the trade and just offers a little bit better entry. And which level you need to use will be we won't discuss right now whether you'd buy the 15 or the 5, other than to just say we'll, at the end of this master section, talk more about why we could have picked which level. So we'll leave these on the screen for now to come back to this. But this is a situation where you have a 5-minute level. It's completely gone through the level. The level is still valid. So then you can go and buy that again as a reverse level. And the next thing you would do is once this is hit, you would mark your next 5-minute level as the perfect spot to enter. So look at that. Even if you didn't enter that 5-minute level when you first had the chance as the reverse level, because you didn't believe it was going to hold, the beauty of this is when you see it that it does hold, to say, hey, look, this 5-minute reverse level hold. When we get above this 5-minute level, like so, we can just rebuy this 5-minute level because it's the next 5-minute level to test its target. So if I were to hit play, there it is. You go there, you test it, you move up, right? And you're going to keep moving up here in the move, right? So that's the reverse levels. Like you can see exactly where they get hit, and there's a 15-minute level gets hit. And you can see that reverse levels, again, it's when they wick through and they go, and you were able to buy that same level and you follow the trail of those levels. So like next would have been this one here, body or wick. Look at that. When you have your reverse level, your next trade would have been here. Your next level, when it's touched, is here. So you buy the wick or the body, doesn't matter. Look at that perfect trade, right? And then you would have made yourself a nice little 90% on this trade, or 88% or 90 or whatever it is. Perfect, right? So that's reverse levels. Combo levels are a part of reverse levels. So a combo level is the next thing we're talking about. A combo level is when you have a level like this. So we marked this as the 15-minute level right here. So this is the 15-minute level. You can go inside of that candlestick and go and draw down and find more levels that continue to be inside of that candle. And the rule is in front of it and below, in front of it and below, in front of it and below. So next we can go to the 5-minute level. So that's what we did. We went in here and we already marked a combo level without even telling you guys and gals. We have a 15-minute level. We have a 5-minute level there. Next, we would go and find the 3-minute level. So you have a 15-minute hold level and it can combo to the deeper part. So the next level is actually a 3-minute level right here. So let's mark that in pink. And what we are doing is we found the 3-minute combo. Let's go find the 1-minute level. And the 1-minute level is right here, but you also have the wick or the body that could be tested. So what we're going to do here is we're going to say, here's the 5-minute level. Let's mark the body, the wick. Let's mark them both. And we know that the white line that's higher is the body. So right now you have 15-minute level comboed all the way down to the 1. And that's how we would say that. So that if you were to look at this, you could see, we actually need to go back to the spot that this created. So if you looked at this, you could see where your levels were being hit, right? So you have a 15-minute level hit, hits the 5 combo, hits the 3 combo, goes after the 1 combo, tries to move up, falls down, deep dives the higher time frame. So like you can see which level got deep dove here. If you just move over, and we're going to delete some of these lines, and maybe we'll just use the replayer tool so this doesn't happen again. Let's use the replayer tool, cut it off right here. And we're trying to see which level didn't hard close. So we know the 1-minute hard close because we already saw that. Like your 1 minute, let's find this 1 minute level hard closes right there. So we can delete that. This 1 minute level hard closes right there. So we know we're not looking for 1 minute reverse levels in the future. Let's go to the 3-minute and see. Look at that. The 3-minute is hard close. Let's not use that. Let's go to the 5-minute levels. Oh, look at that. The 5-minute level is hard close. Let's not use that, right? Go to the 15-minute level. It's a 15-minute level hard close. The 15-minute level is not hard close. So we could use this in the future if we were looking to say we are using a combo level and this is what we would rebuy, right? And so there you go. You have the rebuy happens right on spot. So you have it here. You have the rebuy happen, the 15-minute level, the combo level allows you to see which level you should be rebuying. And then when that doesn't hold and it fails down, we had that 5-minute level rebuy down here, but that might have not been a 5-minute rebuy. Indeed, that might have been a combo level to here. So let's actually take a look. And oh, look at that. We've got a 5-minute combo level right here. So that 5-minute combo level gets hit perfectly. Let's see, what about a 3-minute combo level? Do we have a 3-minute combo? That's also a 3-minute combo. Surprisingly enough, you've got both that 5 and a 3. Do we have a 1 minute? We have a 1 minute down here. Does that actually ever even get hit? Let's go take a look. Just because they're combo levels doesn't mean they're always going to get hit, right? Let's go take a look. Remember, the 5-minute trail is what we followed from behind there. So really, if we were going to combo this, we would say, hey, the 5-minute level in the past got hit. here's a spot where the 5-minute level is, and then it gets hit perfectly, and also gets hit perfectly a second time. So let's just hit play here. This is the 5-minute level. That's the combo, and let's see what gets hit. None. It just sinks right through everything because that 5-minute trail, as we saw before, had already existed. That 5-minute trail went from here to here, broke that move. So now you're here, possibly only in a 15 because you broke your 5-minute trail. So you got this 15 here, goes to this 15 here. Look at that. We're already starting to get further and further in this thing. Now we got the 15 here. So we saw that that 5-minute broke, therefore not being allowed to use it anymore. So you can easily see how the mixture between reverse levels and combination levels allows you to see which level to use perfectly for pretty incredible accuracy. The next thing we're going to talk about is floating levels. So a floating level is when you wick over top of a previous high. So what that's going to look like is this. If we were to go below this, we would create a floating level on this side. So I'll just put an F on this side. So when we go below this wick right here, so this is the difference between laddering above something or going below it. So if you've laddered below it, you create a floating level. If you've laddered above it, you create a ladder point. So when we go below this right here, we create a float on the top, and vice versa. If we were to go over top of this, we create a float on the bottom. And what a float is it tells you where whatever part of that move brought you up to that level, that hold level is going to hold. So let's create the float first. So we know what the float looks like. Okay, good. Right there. We created a floating level. That means this part of the move that brought it up should hold it. So let's keep going here. Right there. So the floating level is actually executed perfectly. When we got over top of this, this is the piece of the move that brought it there. So now we can combine floating levels with reverse levels and combination levels to see, hey, this is perfect because we created a floating level here. This is now considered a floating level. So F for floating level because it went above this high, right? And if we keep going with this right there, oh, you see it happens right there again too. When you keep going above this, this should create your next floating level, which should be in here, right? At this point, though, you had something else happen. So when you are looking at this, you have to realize that you created polarity here in the chart. So when you have these floating levels, it's easy to see one part of it and say, hey, look, it's got to hold this part of the move. It's moving up because it's a floating level. Therefore, you're just going to perpetually move up. That's not true. This was created as polarity. So now we have to start mixing in polarity into this because if we're staying above this, we're going to continue to stay above it. So floating levels take with a grain of salt because you can't just rely on one theory only. And for example, this right here, getting below this means this part of the move would hold. So if you were to go to the higher time frame and say like, hey, look, you have this piece of the move right here, right? This is the level that brought it there, which is, this is the floating level. It's the hold level. That's the correct time frame. If you get below this, you should rebuy this floating level right here. So then if we just hit play, let's just watch this thing keep going. You should, in theory, hit this floating level, and it should be a pretty easy moment. So there it is right there. You actually hit it way before that. You actually hit it right here, body or wick, remember? So you actually hit it there. So that floating level gives you almost like that perfect accuracy once again. And then let's look for one more. Oh, it actually just happened right now, right in this exact moment. So if this, well, that's awesome to see in live as we're doing this. If this right here, if this were to break up over top of this, what would happen is this is the hold level that brings it there, right? So then you would have this right here is a floating level, and let's go take a look. I think this just happened a few minutes ago, live charting. So this would have been the perfect buy spot because again, it is the floating level from the top side of the chart. So you break above this wick, you create the float on the bottom. And that's also, floats and ladders are intrinsically connected if you're not getting yet, because when you float, you typically attack the ladder point. Or when you ladder, you typically attack the float point. So there's two kind of interesting things there. Now, I'm going to leave it at that. Let your imaginations run wild and talk to you about rejection as a target. Now, rejection as a target is a very interesting concept. It gives you a lot of really cool buy spots. And the way I'm best going to explain this is maybe I'll just find a random spot on the chart. Let's just go. Yeah, right here looks good. Right here. Sure. Why not? Let's just zoom this in. Rejection as a target is realize that you are constantly trying to create hold levels in your charts, right? So if you were to go right here and say you wanted to move down in this chart, you would want to get below a hold level. So in theory, if the chart all of a sudden right now were to go up like this, 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 and this, if it were to fall and you had a time machine, you could be like, oh man, this is the perfect rebuy spot. So you would go and you'd rebuy here before it went down. So then you would say like, oh, this is the absolute best spot that you could hope for in terms of a buy, right? In terms of a rebuy. So rejection as a target dictates that if you get below this level, you're going to be in a really good spot, because if you entered your trade here, you have the protection or the shield of the hold level, that so that like if you're in that trade, you know that you can stay in that trade as long as this holds and you're always in profits until the move breaks down. So rejection as a target defines that before a hold level gets created on the correct time frame. And again, we're not scanning time frames in this video. We are talking about the theories. If you have a level that you want to get down below, that becomes the perfect spot to reject the trade. So if you were to go and look at this, you would see that when this got created, so then again, if we were to go to the hourly level here, rejection of that would be its target. So you can see right here, this is the hourly level that you need to get under. So it will constantly try to stay above it. Almost think of this as polarity in a way, because it will constantly try to stay above it, and it will constantly use it as almost a polarized point. You can see where it, gets below and it fights to get above it. And then when it gets above it, it pops right over. And then you're probably gonna have another little fight here for that part of the move, and it breaks right down as soon as it gets over it, right? Like this is rejection as a target. And then so this would have been the next example of that. So go back to the moment this is created right here, and you can see it's desperately trying to get back over that so that it doesn't create it as a hold level. And then 15-minute level right here. So if we were to change this to green, rejection as a target becomes a real thing. So you can see right here that it stays over until it gets under, and then it just completely collapses. So if we were to go in this current move where we are on Bitcoin right now, right? So right here, rejection as a target would have been something like trying to get above this. Getting above this would have been a big moment, because you're creating a hold level after hitting a perfect target. Or right now, if you were to want to pull back, you need to get under this. So live in the moment where we're moving up on Bitcoin right now. And if we get under this, guess what? We just created a hold level, and that becomes a great buy spot. So people will buy right there because it will try to sit here and hold, never getting below that polarity, and then simply move up, right? Or if it gets below that move, it's like, oh man, I just entered here. It's perfect. Now I can just use this as protection on the trade. And as long as we stay under that, I can stay in my trade. And the second we start to move over top of it, like it's like, oh, wow, that's perfect. And this can be the front side or the back side of a trade. And it can be different time frames. Like you might look at this and say, hey, there's 3 minutes and 35 seconds left. This could potentially be a 5-minute rejection as target. And we might sit here and try to move down against it, right? And this is just in the moment. We clearly have to wait to see what Bitcoin's going to do, what kind of target it's going to hit here, possibly this, and maybe create this as rejection as target. We can watch this for a second, see what happens, but that's the point of rejection as a target, is that it will constantly have this moment where it is looking to fight against the current piece. So if this closes in white, then you're going to know that's rejection as target. If it closes in blue, rejection as target would be getting over top of it, because now it's like, oh, look, there's an awesome hold level. Get over top of that hold level, and all of a sudden you're bouncing up, up, and away. Get below this. So it's kind of like almost like the counteractor of each other. Get above this, we're still moving up. Get below this, we're starting to move down again, right? And this is going to leave us into our next theory as we sit here and watch this, and we can come back to this, see as this move unfolds, which is +1, -1. So +1, -1 is the dictation that no matter what time frame you're on, you have to go after the time frame below or above it. If you go for the time frame below it, so an example of that would be, we've just hit an hourly level. We now want to create a 15-minute hold level right here. So if we were to go to our 15-minute charts, rejection as target currently in this trade, because we have 12 minutes and 16 seconds, currently rejection as target would be right here, because we want to take the time frame below this and we want to get above it. So that hourly time frame now has to get above a 15-minute level, and that 15-minute level would then have to get above a 5-minute level, and that 5-minute level would then have to get above a 3-minute level, and so forth and so forth and so forth. And this is +1, -1. It is the ability to take any level and understand the relationship it has with the time frames beside it on either side. And then so in this as plus one, minus one, what you would do is the nice part about plus one, minus one is you can now start to see where trades would fail or succeed. So an hourly level can't get stopped at the target below it. So if that hourly level was all of a sudden to stop on, say, a 15-minute backside, which would be this, well, this would be breaking that hourly level. If it were to go up and attack the 4-hour level, which would be to get over top of this guy here, well, then it would be in succession and it would be continuously moving up, because this plus one, minus one, this is the time frame above it. The 15 is a time frame below it. So now that we've hit this hourly level, we have the full confidence to say, okay, if we start moving up and stop here, well, we're going to be breaking down. If we start moving up and get above this, well, that's where we're going to continue to move up, and this hourly was in succession. So this again creates more different types of polarity because it's polarized and it only has one direction it can go based on these two pieces. The first piece being, and let's delete this circle here. The first piece being, is it going to reject this 15-minute level right here? And it has another 15-minute level it can reject. It can reject this level here or this level here. It'd be interesting to see this because this would be a reverse 15-minute level that would protect it against the 4. So it might, try to crawl up to here, but which level is it going to hit? If it hits this green, well, it's likely sinking below this blue line here. If it gets above the yellow, it's just going to keep going up and up and up. So plus one, minus one is the building of time frames against each other. So for example, right now, another part of this is you could say, hey, we have created a 1-minute level. We haven't actually tested this 1-minute level yet. So we could constantly go and test this 1-minute level over here. Right. And then once you test this 1-minute level, I think you'd go here, you would try to create the 3-minute level. So after that gets tested and bounced, then you have to go and create your 3-minute level, right? You have to go here and create that as a 3-minute level and say like, hey, look, that's important to gain that level. And so we might be able to see rejection as a target get hit here. And that'll be pretty neat to see. So plus one, minus one is a really, really great theory that allows for the ability to see what time frames are relevant, and always remember. And there's another, there's another good example I can do of this. Let's put this on a 15-minute, come back to it. Okay. If you were to target, let's find what level was targeted here. Okay. This is clearly a 15-minute level being targeted. Now let's verify that by coming out to here and just making sure there's no hourly level. There's no hourly level. This will be the biggest time frame. So a 15-minute level was targeted here. Okay. Let's wait for that to get hit. Come on, Bitcoin. 15-minute levels hit right there. Okay, good. Perfect. Now we could sit here and say, okay, where's this thing going? Is it going to break up or is it going to break down? And that's going to depend on the furthering of the time frames. So if this 15-minute level gets hit, if a 5-minute level holds it up, it's going to continue moving up because that's the time frame below it. So you mark your 5-minute level, and if this continues holding, it's going to continue to move up, right? So you're going to sit there and say that's going to continue to move up, and this 15-minute level is only going to break down when you have the 5-minute level on the top side stop it. So let's mark this 5-minute level equal to the bottom here, and then let's go mark the 15-minute level on this, which looks like the 15-minute level may be here as a break level, right? Hit play. So it targets a 5-minute level. So that is telling you that that 15-minute level on the bottom side is breaking, because you can see where you have the 15-minute level here, the plus one, minus one. This in this case is the minus one. This is holding the move up, allowing it to continue to move up. If it can't at least hit its equalized target, which is now a Pandora's box, target to target, or a mirror, target to target. If this is a 15-minute, but a 5-minute, which is the minus one, protects it and stops it from moving while this side of the chart is broken, right? If you were to come here and say, hey, this is holding it, this 15 is there, but the 5-minute is holding it, well, it's going to keep moving up. But the question becomes, is it moving up to the 15-minute level, which is equal to it? Is it going to the 5-minute level, or is it possibly hitting the 1-hour level? If it was hitting the 1-hour level, then it's going after the plus one, right? So then you could go there and say, like, did it hit this part of the 1-hour level? Right there, it hits that part of it, but it also doesn't reach the 15. So you'd actually have to be above that 15 to the hourly here, because you'd have to go through all time frames in sequence, 5, 15, 1 hour. So you've got the 15-minute here. gets held up by the 5 minute. It should at minimum target the 15. Doesn't. It actually just targets the 5 minute. Therefore, it's breaking down because it's not able to. So the outcomes could have been this. The 15-minute level here gets held up by the 5. Can it keep moving up? Yes or no? The answer is yes. Okay. Can it hit this hourly level up here? If it can, it's breaking up and above because it's saying this level was in succession. If it can only hit this 15-minute level here, well, then it's creating a Pandora's box or a mirroring situation where it's saying we've got a range that's happening here, 15 to 15. If it can only hit this 5-minute level now, it's saying that this down here is actually breaking. And so when you hit play, you can see that the move actually breaks down and goes to a lower part of its move, right? So that's going to be your +1, -1. And we're still looking and waiting to see if it can gain this 15. But +1, -1 is also very, it's very strong. And it really allows you to see where you can push this theory through and to find out what levels are being targeted exactly. Now, the next thing we're going to talk about is disconnected levels. And we're going to go back to this 15-minute example back here to see this. So a disconnected level is when you take combo levels and you disconnect it completely. So let's take this replayer tool off right here. I know we had the 15-minute. We're just going to use the same level just because, well, why not? It's the same level. So that's super cool. We can just use the same level. And that's my reason. And I don't need another reason. So let's just use this level. You got a 15-minute level here. You can look for combo levels inside of this when you keep going down into the move. But let's actually use something that goes a little further into the move. Actually, you know what? We said we're going to use this. Let's just use it. So there's the 15-minute level. Here's the 5-minute level, right? And you're always going to use like the backside, the first level that you see. So if this was a white candle and this was just the wick, you'd use the wick. If there was no wick, you'd use the body. If there's a backside, you'd use that. So you're always going to the next most localized level in that piece. There's a 5-minute combo level. This is a 3-minute combo level. Is there a 1-minute combo level is our question. Let's go there and let's look for the 1 minute. Do we have a 1-minute combo level? We actually do. So this is not a disconnected level. A disconnected level would be when you don't have that next time frame down. So let's just go here. So you'd have a 15 comboing to the 1 and you'd have like perfect clarity here. Let's try to find another example where we can see if there's a combo level that's disconnected. So we tried to use that one. It didn't work. Let's just go and let's go to a different part of the chart. Let's just go like right here. Yeah, why not? This looks cool. So you got a 15-minute level right here, right? Now, hopefully we'll be able to see it on this one. Let's take the replayer tool and let's cut it off right here. Let's find all the combo levels. So you have a 15-minute level right here. You can start on the back side. Let's go to the 5-minute level. So the next 5-minute level would be right here. That would be this, right? You could go here, but that's fine. You go right here. You always go to the first available piece as you keep moving down in the charts. The 3-minute level would be right there or here. So you've got a combo to the 3 right here. And let's mark that. And I don't know if this might be another situation where we don't have a disconnected level. Let's go see 1-minute level. Yes or no? There's a 1-minute level. That's too bad. And that 1-minute level is here and that gets hit perfectly. So there's another fail. Okay, well, we're just gonna have to keep looking for examples. Let's try to find another one. Try to find a disconnected level. Yeah, try this piece next. Sure, looks good. Let's try this right here, 15-minute level. Okay, let's do it. Let's go replayer tool here. Mark this as green, right? 15-minute level there. We have a 5-minute level here. Ooh, this might be a good one. This might be a disconnected level. Let's see. 5-minute level right there. 3-minute level right here. Come on, fingers crossed, no 1-minute level. Disconnect for us, baby. There's a 1-minute level. Son of a gun. Okay, well, we're going to keep looking. It's a 1-minute combo. Again, we found it. We're going to keep looking until we find a disconnect. Random chance is screaming in our face. So let's try this one right here, 15-minute level. Okay, let's go right here. Let's go 5-minute level next. Oh, we're doing good. We might have one here. Doesn't look like there's a lot of candles for it here. Aha, disconnected level. So you would have no 3-minute, but I guess you're going to have a 1-minute down here, right? Like that's going to be the case in point that you're going to have a 1-minute level down here. So then you have a 1-minute level right here. When you have a level like this, where you're missing a time frame in between, this is called a disconnected level. So you are going to go and you are going to be able to see where the move disconnects, what time frame isn't available. So now that you see that, if I hit play here, we might need to move up time frames here. Play. Come on, come down, test the level. There it is right there. See, when you have a disconnected level like that, you can only go to the maximum of where the disconnect happens. So we know the disconnect happens at a maximum on the 5-minute level, so that when you lose the 5-minute trail, you are going to break the move, because that is the 5-minute level. That is the 5-minute disconnect. You can see it gets here. You have a hard close here. You're already starting to lose the move. The last and final thing you could do would be to lose this 5-minute level, and that is it. Once you've tested this 15, when you close this 5-minute level, you are going to lose that move because this is disconnected. Okay, let's talk about our final 2 topics here, masters and controllers. Now, I've designated out a list of masters, targets, Pandora's box, range trend controllers. And this is great because this is a deeper part of understanding masters and controllers. And if you want to understand more about that, it's on my YouTube page. You can continue to find all the theories and things that we talked about on my YouTube page in depth in great example. This video, again, is to just give a understanding of all the different topics that we can use. And what we're going to do here is we're just going to focus on number 1 and 5. Target, Pandora's box, and range trend are all parts of a master and controller schematic. But for this video, we are simply taking this and we are just focusing on 1 and number 5. At the very bottom of this, we're still going to put 2, 3, and 4 just as a constant reminder that we still have things that happen between masters and controllers. But this is really important to understand the way in which our charts work. So we have masters, which are master timeframes, which designate the larger pieces of what we're doing. And then we have controllers, which are the pieces that are controlling the move or the range. So a master would look something like this. You're going to find your highest timeframes. And for example, you have a master trend right here. This is a master daily trend. So this is dictating on the top side of our charts what the master is. So that is going to do its best job to continuously target daily levels on the bottom side as well. So for example, this daily up here is the master. It will constantly target the same levels on the bottom side of your chart, right? And so, or the bottom, and it'll target the same on the top. So if you were to hit this, it would target that. And if you were to target this, it would hit that, et cetera, et cetera. So you are always going to have a master and a controller scenario between all moves. And the controller is the time frame that is going to tell you what is happening in the chart to offset that. So the basic principle theory is time frames target time frames. So you have a daily up here and you have a daily down here. So time frame targets time frame. So in theory, these should be your 2 masters. You can see it happening down here. So if we were to actually take this replayer tool and say, hey, let's go right here. You already had your master time frame on top, and on the bottom you had the same thing, the daily right here, which is your daily hold level. It held the move up, and now you should be targeting your masters up top. So you can see right here you had a daily time frame, which is also a master, created a trend, and you can create a trend on this bottom side like so right here, and you're going to see much of the same thing. So in theory, you should be targeting trend to trend or level to level, or since trends are levels, it's just level to level, all of them, no matter what it is. So then you see right there where you target that level up top. Not only have you targeted the daily hold level, but you've also targeted the trend. And this trend here is going to break on the bottom, and that's fine. It can break. And now you're in a scenario where you're just constantly moving out your trends, right? Like you're gonna have to wait to do your trend work, and you're likely gonna have a range trend that exists from here to here, which would be a part of number 4. So we're not going to worry about range trends right now, but if you were to go and do that, you would do something like this to start, and then you'd continue to adapt out those range trends as time went on. So again, not important for right now. Maybe when we hit this level right here, we can say, hey, we've got a range trend from here because that tested that level to this point right here. So you test this level as the base of the range trend, and then when you go and test this daily, that's the next part of it. So that's your master time frame. It's the highest time frame that's controlling the outmost part of the move. And you even have master time frames on internal pieces of moves. Like for example, if we were to just go here to the 4-hour, maybe you would have something like this being the master time frame right here. You've got this, and then you'd have a 4-hour level, and this can be an internal master time frame relevant to its range. So then you would just say, okay, it's relevant to this range, that's the master time frame of that range. So, and we'll come back to how we're going to use that in a moment. So that's where we can make our decision points. Now let's talk about the controller. So that's the master. The master is the highest time frame. The controller is the piece of the move that's controlling the direction it goes in. So to understand your controller, you have to first go and understand your master. So you define your master first, then you have to go through targets, Pandora's box, and range trend, which is step 2, 3, and 4 to understand where 5 exists. So I'm going to give a very basic example of this. A controller would be something that is controlling whether this thing can go up or down. So if we were going to say, hey, we're going to continue moving up in this move like this, like we're going to continue moving up, the controller will tell us that we're doing that. If we're going to start moving down, the controller will also tell us if we're doing that. So how you find controllers is they are typically +1, -1, and there's different ways that we can find controllers. Again, just repeating myself for the millionth time. In order to understand all of this stuff in great depth, we'd have to go into the YouTube playlist that I have to go and further our knowledge and education on these topics. Because again, this is just a quick introduction to all these topics and to show you where you need to be. And a great video to watch over and over and over. So the controller is typically going to be the +1, -1, and you do have other controllers, but we're working only with the +1, -1 right now because it's the most frequent used, and I think it's the safest to teach. Again, +1, -1 is the time frame up or down. So if we were to look at this and say, hey, we have a daily level up here, right? You have to continue targeting the daily level on the bottom. Or if you were to +1, -1, the 4-hour level can tell us if we are going to be breaking down the move or if we are going to continue moving up. So when you go and look at this daily time frame, you would say, hey, where's the 4-hour level? This is the daily level here. So like, well, the daily level is not being hit yet, but 4-hour level is. And because this is an origin level, it would actually be a daily time frame because it was polarity. Polarity is always one time frame up when we use it. So if it's a 4-hour polarized level, it's actually going to count for the daily level. And so what we would do now is we would start looking at, well, look at this. We've got a daily hold level right here. The daily is holding it. We need to find at some point where we offset the time frame to a +1 or -1. So either the daily targets a weekly or the daily targets a 4-hour. So if this was moving down and down and down, if the 4-hour levels were moving it down, it's saying, here's the daily, it's building to the 4. If a 1-hour level starts holding it down, it's building to the 1, and it's starting to break the move down. So the controller would be the current +1, -1. So let's take a look, see if we can find some +1, -1s here in this move. So we do actually have it right here. This is the 4-hour backside level. So if we zoom in here, take this off and simply go and make this the 4-hour backside level, you can see here that whether it's the backside or the front side level, it is hitting a level that's trying to break the move down. And if you continue to go, it's hitting levels that are still trying to break the move down, right? So then you would go and you'd say, hey, here's a 1-hour. And we're probably going to do this on a smaller time frame so that we can understand it, and maybe on a move that's already developed, so we're not doing it on something that's current in the moment. So let's go kind of up, and we'll just find another level here. This looks good here, this part of the move. Let's just focus on this right here. Although that part of the move is already destroyed too, that's perfectly fine. We have a daily here. The next thing we do is we need to look at the 4-hour level. So if this 4-hour level was holding, and we should really start with the daily because we always go and find the highest time frame first and work down from that moment. You've got a daily there. So let's delete that. So you're actually between a Pandora's box here. You're going from daily to daily target. So you really need to start looking to which side of this is going to hold it on the 4-hour, because that's going to tell you what side of the move is actually breaking or moving in that direction, right? Because if this side stops it, right? If this 4-hour stops it, we are going to be moving down. If this 4-hour holds it, we're going to be moving up. And if both of these things happen, where you say you got the 4-hour here and goes to the 4-hour here, you're going to have to go deeper and look for the 1-hour levels now. So we're just going to walk through this thing step by step here, hit play, see what happens. Okay, so the 4-hour level is hit here, and that's fine. And it's broken over, so we can actually delete this 4-hour level and just go back to the assumption that we are now daily to daily. Again, being that this would have to hold it down, or something here, or the backside, some type of move in the 4-hour would have to hold it down here, so we could just kind of keep going, right? So we do get that 4-hour level. We get another one here, and so you actually have this 4-hour level holding too. So you've got a 4-hour level to a 4-hour level. So like all things equal right now, right? Like this is where it gets to that point where you're like, okay, now what? Now you need to start looking for your hourly levels. So you have an hourly level here, which is polarity. That would technically be a 4-hour level because it's polarity. So we can find the 15-minute level. Let's go and look for the 15-minute level and see if that's a spot that can hold us down. So that's the hourly, so that's not going to work. You have a 15-minute right there actually, and that's perfect. So that's actually before the hourly. So that's actually a 15-minute level. It's actually happens first in the move. That's a 15-minute level origin, which actually ends up being a 1 hour level. And on the other side of the chart, our 1 hour level would be a possible reverse level right here, which looks like it got hit perfectly. So that's fine. We had a reverse level hit perfectly on that second candle there. So it goes down to the 4, hits the 1, and now we can trail that 1 hour to right here and see what happens next, right? Hit play. That 1 hour level is holding. So all things equal, the 1 hour level, oh, it kind of didn't really hold there. So actually now we would more look to see the same thing on the bottom side here. Let's look for that 15-minute origin level if we have it, and we do. So actually all things equal, 15 to 15. So you can kind of see how the decision hasn't been made yet to see if an hourly level to an hourly level can be completed here. So let's see what happens on the top side of this chart. Maybe go to a bigger time frame here. Because man, remember, this hourly level has to hold it. And this hourly level actually didn't hold it. So you can see there, when that level collapses, what has happened is you've had your master up top and your master below. So your two masters have hit each other. You've got a master time frame here, a master time frame here. This 4 hour level would have to hold it down. This 4 hour level would have to hold it up. This now would have to hold it down. This would have to hold it up. You lost this, so you're actually breaking the entirety of the move here. So you can see how you go right back down to the daily and start going even lower in time frame. And I'm assuming this had hit a 1 hour level. It actually did. That's perfect right there. So you can see right now where your controllers are becoming very clear in the trade, because at first you would have had to have a 4 hour level here that you lost, right? Or some type of level that you hit. You've got a 4 hour backside right here. So that 4 hour backside was hit perfectly. And that's the only piece we didn't do, is we didn't adapt when we were back here in the charts. So if we were to actually go back here, the only thing we didn't do in this chart to see this move is to say, hey, what level did this actually hit? Well, if you go to the 4 hour level, you can see the daily has the 4 hour here, and that's perfectly fine. And then even if you were to go to this moment, you could say, okay, well, so your 4 hour to 4 hour, again, you're kind of still all things equal, right? So the next part of this would be, you're looking for your hourly levels. So you can get rid of this and you can hit play and you can say, well, is the hourly level going to hold us down or no? And it does. It holds you down right there. So then your hourly levels on this side, where do they exist? So we can actually just delete this daily because we've broken below it now. We might not have hard closed it, but we're just going to delete it to clear up this example. You've got your hourly rate here, right? You've got that hourly there. You've got this one here. You've got kind of like looks like a 15-minute origin level here. And what we're going to do is we're just going to use this hourly. So this would have to hold it up, all things equal. So you can see right there, it tries to hold it up and it can't continue to move up. So now the move is going to be in failure. And you can see where the move is in failure now. From that moment down, it continues to target lower and lower parts of the move. So this is masters and controllers. By understanding what your master is, you can see what your targets are. So then if you were to go through the 1, 2, 3, 4, 5 process, if you were to take this now and put these back in the correct order up here, right, like this, we got to clean this up a little bit, make it look a little nicer. If you were to go and say your masters have targets which create Pandora's boxes, and we didn't do the range trends part of it, but then you can see how range trends would be levels anyways to help us find more of these hourly levels, these 4 hour levels, things like that. You can then see the controllers of the move. So when you can understand masters and controllers, you can really get a good grasp on the entirety of what something's going to happen with on whether it be Bitcoin, the S&P 500, the DXY, USD, JPY, Forex, commodities, stocks, crypto. It doesn't matter. It's all the same. And then you can really see how masters and controllers interact with the charts to show you what's going to happen next. So some of my most famous moments in crypto that made me so popular over the past 6 or 7 years have been moments where I've used masters and controllers to define the future of things like Bitcoin and make some of the crazy predictions that I have. So masters and controllers are a very powerful theory that is used on a regular basis to show us what is happening with day trading. And then that completes a full list of the masters level information. The next thing we're going to go into here is some examples of doing live charting of logic flow and analysis, like an example of putting all of this together. We'll go through 1, maybe 2 different examples. And we're also going to talk about a wrap up and how to best get the most out of this once you're done this video. All right, so let's now use absolutely everything, go through our list from the very beginning of the lessons, all the way back from the beginners part, all the way to these master examples in efforts to best chart something together as a group. So let's just delete everything and let's go through a full workup example. And we're going to do this on Bitcoin. So the first thing we're going to do, as always, start time frame down on Bitcoin. We are going to only be using the daily time frame. We don't really care about anything else. So we're going to have our daily trend on the bottom, and let's find some trend work, or sorry, on the top, and let's try find some trend work on the bottom as well. So, the first thing we're going to do when we do these charts is we're always just going to start with the largest information first, work down in time frame from the largest pieces down to the smallest, just to get a good understanding. We're already on the daily time frame. We have all our color coding done, and this is visually going to allow us to just move through these charts without having to worry about where we've marked things. I want to mark this hold level. I'd also like to mark a level here for polarity. So that one we're going to need to adjust to find the right time frame. And I want to also mark the most relevant break level that I can see, which I think is going to end up being this break level here. And I think that's fine. And let's leave it there and let's just move down in time frames. Okay, so we already know we're moving down in this trade. So the first thing I'm going to do is I'm not going to go and mark every single level on the top. I don't think that's relevant. What I'm going to do is I'm going to best follow this trail of ladder points to see where I can create that. And so fine, you've got a 4-hour level that hits here. You've got a 4-hour origin here. I think this one's going to be pretty important, this 4-hour origin in the future. So I'm going to leave this one on. So that one's going to be important to me. And so you've hit a 4-hour origin. Let's keep moving down the line here. If you hit a 4-hour level here, yeah, you've hit it pretty perfectly. We don't need that. Possibly a reverse level here, but more like a 4-hour break level here, I think would be appropriate. Yeah, so like that 4-hour break level there. And down here, we can start also looking at what these levels look like. So we've got a 4-hour backside here, and we've got a daily hold there, and we've got a 4-hour down here. So I also want to add this 4-hour right here. We're going to go on the body right here. I don't feel like there's going to be too many combo levels there. Let's just kind of follow the flow of what had happened here on the chart. So this 4-hour level was a reverse there, meaning this one would be next. So what you're going to do is you're just going to follow that trail, and this would be your next reverse level, which had actually already gotten hit too. So your next reverse level would be here, and that just leads you into the break. So I don't think I would use this because this 4-hour level is so close. If your 4-hour level was up here, I might use it. But being that these are so staggeringly close, I don't really think there's a point of having both levels. Instead, what I'd like to do is I'd like to put the hold level and the break level. So if we hold this, obviously that's great for moving up. If we hit the break level, obviously we're indicating that we're breaking the charts down. There's no immediate origins in here. There's this one right here, which could also be a daily level, but I'm not looking for that since we've already laddered the hold level after hitting that. So because we hit this break level and then laddered after it, I'm more looking to preserve the ladder point on this move. So that looks good so far. Let's work a little bit on this side of the chart. So I think you've got a few good high time frame targets, but let's work on this side of the chart here. You have got that break level. You've got this origin here. I wonder if there's something back in here. I'm going to keep investigating. You do actually, you have, this is an hourly origin. So this is going to be the origin that we use in this move. This is going to be our 4-hour level. And so now I'm getting a good grasp and some comfort on, hey, the hourly level is next. So I think the most that we could ever reach up in this trade while still moving down. So let me make this clear. I think we are still going to be moving down to get some targets. So I think the highest we can go would be something like this to target those. And then at that point, you could use this to make a range trend, or this, depending on this level is hit. So you could use this to make a range trend. So I think this opens up the opportunity for a few range trends. So I think that's good. I think this 1 hour right there makes a lot of sense. So I do like the fact that we are moving from daily to a 4-hour origin, which is another daily, to a 1 hour, which is a 1-hour origin, which is a 4-hour level, into possibly seeing this get targeted as a reverse 4. We can leave that reverse 4 there. So it's 4-hour, into a 1 hour. So I can see the degradation in front of my eyes of what is happening on these charts. So it's going to allow me to make a pretty clear assessment of where I think we're going next. Like I think the highest you could go is somewhere in this 1 hour backside to this 1 hour front side. So then you have to make a decision what you're buying, the backside or the front side of the move. And I think at this point, when you see the levels being hit and deep dove, I think you would just straight up go for the front side. The 66,550 would be the spot I would look to short to try to break this move down. So then we've used kind of all time frames so far. What do we need to gain on the bottom? So if all things are equal, we need to kind of gain this hourly level. in order to start moving up. So if we're going to create like a range, like if we're going to create a range right now like this to this, it's got to gain the 1 hour level. So now I would start going down, and I've defined where this is the level we'd have to gain, and that's the move. I would start to define now where you have to start gaining levels. Like I want to start building up 1 minute time frames. And I know I skipped through and reversed my process to go building up, but I want to see where we can have, here's a backside level. Here's the test of that. Here's a front side. So maybe you look right here for the 1 minute. Where's a 3 minute level? I want to see what we can start building up. You've got a 5 minute level there, which I like. I do like this 5 minute level here. So let's mark this 5 minute level here. Let's put this as orange. This might be rejection as target. And if it is, let's see where we need to start going. And this is the 15-minute level. So you got to get over this 15. And then I think you have a little bit of a Pandora's box between this 15 and this 15, like which side is going to break. So now you can say, hey, if we get over top of this 15 and we hit this hourly as rejection to pull back, can we hold this 15 and kind of go between those two 15s? Or are we going to go down to this 5? So I think there's like a lot of different information you can work with here as you're moving forward in the charts. And as you hit these different levels, you can kind of make those decisions on your own. So I'll do my best here to talk about the decisions that I would make. But now I feel comfortable that we have an hourly level, rejection as target. We have the 15-minute level that would target. This stuff is untargeted up here. So I'd also like to add this as a 1 hour level, because I think this could still easily be a ladder point as well, right? Like if you've got this part of the ladder right here that's gone from like here to here to here, this could be next, right? And then maybe you could even create your you have a trend there, and then maybe you can even create a range trend like that, depending on when this is hit. Like if it's hit out here, then your range trend would be something like that, right? So I think that's cool. I think you've got an hourly down there. I think you've got an hourly here. So you've got a range where you can exist from here to here to understand which 15-minute levels are going to hold. And then you've got a secondary range, which is more localized, which is here to here, to see what can hold in there. And then you've got your levels below that if you continue to hold these, you will be able to get to those higher levels. So the first part of this assessment is, I would say, Kate, we've already hit the bottom. I don't know if our target is hit yet. I'm just, for the sake of this video, assuming it is. Let's pretend a 4-hour level was hit down here. That's perfectly fine. Our 4-hour level's hit. I actually do think it hit a 4-hour level, if I'm being honest. I actually do think there was like an origin 4-hour level back here that hit or something. I know I saw it a little earlier, but there is something. Maybe it's a daily level. The daily level would have been up there. What about the 4-hour? I remember seeing this earlier. 4-hour origin right here, right? Oopsies. Tried to grab the 4-hour origin. Nothing is hard closed. Maybe it was the hourly right here. Again, just trying to go based on memory of what was the level. But it can't be an hourly ever, because that hourly is hard close there. So it must have been a 4-hour that I saw earlier today. 4-hour right here, the very first level. This was polarity in the move. And so it did hit a 4-hour level. So the next thing to do would be to gain this hourly level. So you do have a 4-hour origin, and this would actually be considered a daily. So you'd have to get a 4-hour level. So now, with that information, I can say, aha, like we've got to get over top of this here, which is rejection as target. It's going to be another big hurdle to get over, but then at least you have an hourly that gains a 4. And this is something long-term that can trend up. So we've got pretty much all the levels we need to have here now. So let's start taking a look at like what can happen next. So we'd have to define a rebuy somewhere. So this 15-minute level is acting as the current rebuy right now. I don't really like it as a current rebuy. I think you can do much better. I think this 5-minute level is a good spot to go for a trade if you're going to hold the move, or possibly even the 1-minute level or the 1-minute break level right here. I think this represents a part of the move that could hit and hold, but maybe not yet. Maybe you'd want to just go for this like 1-minute level. So I think you have a few different spots, and this is where you'd measure your risk. And getting into a risk assessment is not something we're going to do in this video. We can do a whole series on RA, just like we did this, a multi-hour video on how you assess risk in a move, which helps you make these decisions. But for now, I think just for me, this 5-minute level makes the most sense for this video. And I would look to rebuy on this 5-minute level to continue moving up. So this is how I would look at this to begin with. And now what I would do is I would start going to add localized trends just for more context of information. So you've got a 1-minute trend here, which I think you would want to coordinate where your buy is. So if you're going to go down to this 5-minute level, yeah, that looks pretty good. Hits the trend, hits the 5-minute level, hits it all at once at the same time. And then you're also going to have a trend up here like so, right? And you've got this to here. And you can start using higher time frames too. Like we can go to the 3-minute and see, hey, do we have a 3-minute? No. Do we have a 5 minute? Well, we actually do have a 5 minute. So we actually want to use that highest time frame. And we don't never gonna have a 5 yet. There's not enough time. We're never gonna have a 3 yet. All we have is this 5 minute level here and this here. So that's all we have. So we have a 1 minute level on the bottom side of the charts, and we have what looks like a 5 minute level on the top side of the charts for these trends. So now we've added our 2 levels. We're about to hit our 5 minute level here. There it is. And that would be where in this video I would set the buy for. You can go down to other levels here for sure. You can hit this 1 minute level. It can bounce. You can even go down to the break level here and see it bounce again. But then again, this would be the spot where you're saying, hey, like it has to stay above this level. This is where it would close, right? Okay, so you actually hit the 4 hour level again. That's good. If this move is going to hold, it's got to hold off something. It's got to close over top of one of these. You know, we can preemptively a little bit maybe move that to right there. Oh, we're having a little bit of an annoyance here with this. Okay, so let's do that there. Let's move this to here. You've actually hit the 4 hour level again. Now you really need to close over top of this 1 minute level. Not in the next 2 seconds, but you don't want to hard close, because right now you have a blue candle, and this is a good actual good moment to talk about hard closing. Now you're in a scenario where you're at risk, because this candle closing under this, if this candle closes in blue, then it can hard close the move and you are going to further dump. This right here also needs to get over top of this level, because this 1 minute level will be rejection as target. This will also be rejection as target, because this represents the ability for this candle to hard close. You've got a trend, you've hit the level. This 5 minute level would be a good one. And you can constantly analyze and now go into timeframes and see, hey, where does it make sense to gain some of these levels, right? Like, again, you need to be above this 15-minute level. So the objective right now is to not reject this as a target, not reject that as a target, not reject this as a target, to keep moving down. Because realize when you reject those as a target, you're setting up for future hard closes where you've already closed underneath those levels. So you don't have, as soon as you go blue on that candle, you are actively hard closing the move, right? So then again, we need to get over top of this 15-minute. We need to see this hourly get over top of it. If we can sit here for 28 more minutes, we would move this blue to here, but I don't know if that's going to be really a realistic scenario. Instead, we need to get over top of this and start developing that move up. Now, this is, of course, only if this move will develop up, this stuff's going to come to fruition. But that's where we have to do our best job to say, hey, does this target make sense? Is it part of our master and controller schematic? And what's next? And so the next thing I'd start to look at here is I would now be looking at floating levels, and I would be saying, like, where does the chart float here? So I'm going to delete this trend just as an example right now. We don't have any floating levels up here because we never went over top of one of our wicks, right? So like the floating level, you don't have one that went over that. You don't have one that went over this. You don't have one that went over this. You don't have any floating levels. But what you do have is you have the bottom here, and this went below it. So in theory, this should hold it. So this should be our ultimate target for a short in this move. That's kind of like the ultimate point where you would say, like, hey, there's a floating level. This is going to keep breaking down if that holds. So if that level holds, and that's a great spot to enter a short, is that floating level. If that holds and you enter it as a short, and if it continues to fail down, you stay until you go below this part of the move. And you can see right now, you can actually move this to here. This was rejection as a target. You can see it had a little bit of trouble going over it. The nice thing though is it created a hold level right here. So now we're in a scenario where you have a 5-minute level and you have a hold level. So you should be good. So right now, if you're trading on 100x, you went down to a possible total of 18% risk, and you're in a plus 15% right now. So you could actually just exit your trade right now, make 15% or 16 or 17%. I think this would be a bit premature. Look, we're already at 19%. And if you had gotten in from down here, because you simply bought the 4-hour level, understanding that that was relevant, you'd be at something like 40% profits right now. Wow, look at that, 40%. If you did $1,000 on this trade on 100x, you just made yourself a cool $400 in 3 minutes. So it can be that simple and easy when you understand the science and the architecture of the charts. And this is kind of like what I saw with this particular trade and how I would have dealt with this in the current move. Now, I'm not saying this is the right move right now to take this 5-minute level as a trade, although it worked out in this scenario. We could have gotten better entry, number one. Number two is we used an example and forced something based on the current level that's being hit, as if we have the assumption that we're moving up from this point. We don't know if we're moving up from this point. We just took that part of the chart and we just went with it. So you have to do your due diligence and your job, have the analysis of all the logic that's happening on the chart, and then the logic flow up to the information of what's happening. So what I did in this is I used masters, controllers, +1, -1. I used hold levels Break levels, I'm going to add this trend back as just like a normal trend and move it to here as a range trend. I think that you can create a new range trend as you continue to move down. Like I think your range trend is actually going to end up looking something like this from here to here in order to continue moving up, because you've got the test of your first level and then the test of your second level, or you're going to come here and make a range trend somewhere. For now, I'm going to use this as the range trend, just as an indicator for the move. So we used range trends. We used a little bit of deep diving, but not too much. We used floating levels. We did combination levels when we went from the 5-minute down. We looked at rejection as a target. We also looked at that 1 minute being a reverse level and ruled that out. The fact that could it be here as a reverse. Actually, that would have been a good trade. The reverse level actually would have been correct here. So the reverse level was correct, meaning this is next. So this might be the next entry, giving you your range trend from here to here. So that might be your next entry as a reverse level. So we're seeing it maybe testing right now. So you can go here, even the wick or the body, it doesn't matter. So this could be the reverse level, or it could be the 5-minute hitting. So I think this is actually a good piece of information to use here. So it's not a reverse level that we're using instead. Well, we don't know yet because it hasn't hit, but range trend, reverse levels. What else did we use? We defined the ranges. We looked at the data points. We looked at front and backside hold levels. We identified this as a scalp. We defined the parameters of a Pandora's box. We haven't looked at any origin levels. We did look at this as a break level to possibly justify entry. And we also looked at hard closes, the effect of time, our entry. We looked at fractal information. We have been watching the valleys and the peaks, although we haven't done anything with it. You could also say here that you have an origin 1 minute here, which could lead to the breaking of that 3-minute or the 5-minute. Higher time frame up. I don't think we're going to get any other break levels. We don't. So you can see how many theories we actually used in that quick little assessment of that move on Bitcoin. Okay, so now let's look at another example. We've let this thing kind of run out for a few minutes. We've seen that 5-minute level was the correct buy. Everything happened on Bitcoin as we had predicted. I think we're good to kind of move on here and look at our next example. And I think we should just go do something in the stock markets that's fun. So what can we do in the stock markets? How about like, do we want to do the meme coins like GME, or do we want to do something like AMC or maybe NVIDIA? NVIDIA has been in the news lately lots. Let's maybe do NVIDIA. Okay, so NVIDIA, how would we start this? What we would do is we would just start getting our bearings, and this thing had moved up. So maybe we can analyze this range instead of worrying about, charting this thing as it's moving straight up. So let's analyze it from this standpoint back here. So first we have to find the master level. So we're going to go to the weeklies. There's nothing really there because you have a hold level here that was hit on the weekly, but I think we can find out what had happened before that. So we would just define the weekly break level there. And let's just simply move on. You actually have a daily break level right here, which turns into a weekly level. So this is a great starting point. So you actually have a weekly level here. So that means your daily levels are going to start holding. So the first thing you would do in this scenario is you would say, hey, look, you've got that level. Your daily levels are going to start holding. So the first, so now you would look for either your straight up daily holds or your 4-hour origins and break levels, right? Like that's just what you would be looking for in this moment. So you have this right here as a break level, right? That one's not hard closed, but it's not touched either. And neither is this 4-hour level. Neither is this. You don't really have any 4-hour origins that could be that. So your best scenario here is you just buy this daily level. And when that daily level holds, now you need to be in the area of looking for a 4-hour level. And then you're going to have your points of polarity. Like, was this one? No. But this could have possibly been a trend that was in the move. So we need to find the range trends in this. You don't have it on the 4-hour. You have it on the hourly. Don't have it on the hourly. We're really looking for the time frame that connects these two. And if we don't have it, we can't use it. So let's go here, take this replayer tool here, look for the 15-minute. You have it on the 15. You do. You have one on the 15. You have your range trend here on the 15. Trend to trend, and we're going to add 2 trends here because this is such a small time frame. We're actually going to go and go back up to the daily. See, we don't have a trend that can be made there on the daily. Well, what about the 4 or the 1 hour? The 4-hour we do. We have a trend here on the 4, and we have a trend on the 15. We have two trends here. Kick it. We have a 15-minute trend and a 4-hour trend. So this is kind of the top side of the chart. 4-hour trend being here, you'd have your 4-hour hold level here. We mark the back side and the front side to see which one gets hit. So just do this. It doesn't matter which one gets hit. As long as one gets hit, the 4-hour level is tested. It's all the same, whether it's this, the wick, or the body. We're just going to leave those there. Break this 4-hour range trend. We expose what it's protecting. We've got the daily level down there, and we just hit play here. We go to the daily level. The 4-hour seems pretty quick. We can do that. That's fine. So you break over your trend. Fine. That's good. You're going to move this trend and adapt it to, oopsies. Move this and adapt this trend to here because that's going to be your next range trend. And you're getting to a point where you're going to be compressed against trend. Again, you break this trend. This trend is cycling. If you want to know more about trend cycling, go to my YouTube series. That trend is cycling there. You break that, it's exposing another part of the higher up range, which is fine. You've got stuff like this, and would be cycling to here and then to here. So what you're doing right now is you're breaking the top side of this chart by breaking that range. And we know that the daily level is hit, so we really have to start looking for the 4-hour information. So I think the 4-hour information, you've got this here, which is your origin, which leads you to this hold level here. And then you've got something like this here. You could possibly have this as a reverse, but I think this is your best bet for your 4-hour level. So if you were to set a buy in this moment, I think you would say this 4-hour level. You could also combo it down. Let's go back to that 4 for a second. So the only other level you could do is say, here's a 4-hour level here as well, and combo this down to an hourly. So you've got that there. Combo it down to an hourly there. That's already been tested. And the only thing you could combo down is to that there. Don't really see where else you'd have a 4-hour level. Don't have any origin. You have one here, so you could actually go right here. This would be the safest spot to buy, would be 81.46, and this would be a 4-hour level that goes beyond the daily. I don't really love going past the daily here. The only thing that I would like to see is if this goes past the daily to hit this 4-hour, it creates a ladder off of this, which gives you a very clear indication that you're moving up. So let's just hit play here, see which level gets hit, but it should be one of these two. If you even get the chance to get in this at all, maybe it'll just break straight up. I don't know. Okay, trading view, hello. You've gone right to your level here, your trend, and then you moved up. So you actually never got the opportunity to get back down in on these levels. So we can just kind of look at what had happened here. So we know this trend is broken. We can just remove that. We have this part of the chart, which is your 4-hour level. And then you might have been able to even combo it to the 1-hour level here to get the final moment before this thing would break. So if you comboed this to the 1-hour level, like so, you've got your 4-hour level, you've got your 4-hour trend. 4-hour trend broke, so you have no more 4-hour levels left. So remember what we said about these trends is that when the trend breaks, it's going to expose that part of the range, which it does. It goes after the 4-hour level, hits the 1-hour level. At this point, you're being told that this is moving up. You actually never got to get entry back down on here. So maybe we missed a level. Maybe we need to go and find where there would be like a 4-hour or a 1-hour origin level. So you've got this here. This acts as a nice 1-hour origin. You've tested it here. You've tested it here. This turns into an origin, which is now a 4-hour level. So we're good with that. So we found the hourly level. We found the weekly, the daily, the 4-hour there gets held. And now once that 4-hour is held, so this is the next part of this. Once that 4-hour is held, we find the next hourly level. So then this hourly level right here gets hit right there. So then you've got your 4-hour level being hit, and you've got the backside or the front side. So you've got the backside or the front side level. And these are all 1-hour levels. So in all cases, you have your hourly level being hit here. The only thing left you would have is possibly a 15-minute level, or you could keep laddering hourlies, but you can't really go below it at any point. Like you've got an hourly here. You've got, that's not, this could possibly be a 15, but it never gets hit. So you don't have anything there. I think we just need to go into this 15-minute time frame right here. Take a look at what happened. I really think there's anything else left in this. Got a 15-minute level right here. You've got the hourly hit below. This would be the next level to get hit, and it hits that and then just boosts straight up, and then you never look back and you break over your range. So this is a good example of, in this video, what we did is we used logic flow, we used controllers, we used a master time frame, we did a ton of analysis. We did not look at disconnected levels or rejection as a target. We simply looked at trend, +1, -1. We looked at some range trends. We looked for floating levels, couldn't find any floating levels. We did look for combos a little bit. Reverse levels we checked as well. We looked at this deep diving targets without saying, hey, we're deep diving a target, but we did look at it as deep diving targets. We looked at what polarized the move. So polarity, we looked for ladder points. We defined the ranges. We looked at front and backside hold levels, strong and greedy. We looked at a Pandora's box without marking it. We did cycles for trends. We did origin levels, break levels, hard closes, the effective time, fractal information, entries and exits. Valleys and peaks, as always, they're on our screen and we see them and we're aware of them. We looked at targets, trends, and levels. So you can see this quick analysis and what we made look so easy. We actually used a bunch of theories combined to see all of this. And then the only other part that you could say with this is maybe you could add some trend work here. So you could maybe do something like this and take your distribution here. And we're just taking one time frame to start the distribution here. Let's go to the 4, make sure there's not distribution. There's actually a 4-hour candle here. So you've got distribution here to here. That gives you one trend. Your next trend would be this to this right here would be your next trend. And so you're still following this trend. You can see how close you're getting to it while coordinating with levels. And off and away, you're gone on NVIDIA and you're just moving straight up at that point. So we looked at this range and how it would break. And the levels that would target, how it would get there and why, and how the buildup of that move went. So it really gave a pretty clear vision of what was happening with that trade. And then just going back to look at our Bitcoin trade that we just looked at, we can still see that this is exactly where we wanted it to be. We have the 5-minute level, which we identified as a buy spot. We're still following trend. If you are in this trade on 100x, you're up 66%. So if you put $1,000 on this trade, congratulations, you're almost at $700 of profit. Right now, if you were to exit, you're at $6,200 of profit. Or sorry, not $6,200, $620 of profit for marking a simple level by using 100x with the accuracy. So there's 2 examples, one on Bitcoin, one on the S&P. Was it S&P or NVIDIA? I don't even know. What did we just do? We did NVIDIA. One on NVIDIA, one on Bitcoin. And so you can see all these theories, they all work across all markets. Now that we're done going through the 2 examples in this video, now let's talk about what's next and how to continue studying past the material we did today and how to get the most next out of this journey and where you should, what your next follow-up video should be. Okay, now that you've made it to the end of the video, I'm going to give you a few tips to leave you off with to make sure that you can maximize your learning path and how to day trade. The first thing I want to talk about is there is no possible way that you could have gotten all the information out of this video that you needed to watch it once and then be done with it. My advice would be to go into each section of this video, rewatch it, whether it's the beginner, the advanced, the pro, or the master series, rewatch these topics over and over and over and over, and then practice them on the charts because there is a ton of information and it's not possible for any one person to watch this and just get it on the first go. And also realize this is a very difficult journey. You are not going to be able to watch this video also a few times, forget one time. You're not even going to be able to watch it a few times and to truly understand the way in which logic flow on the charts work and how we can properly make these decisions on a constant basis to always be having the kind of accuracy that you would need to be a 100x trader. Now, please realize I've been doing this for a long time, over a decade. So the fact that I can do this with 100x leverage and do that kind of crazy trading with that impeccable accuracy is just a testament to how much I've devoted and how much I've developed this science. Now, I created all these rules on my own and I've done my best to share it with the world. And the best thing you can do next is go onto my YouTube channel and subscribe and learn all of these concepts in great details. If you go on my homepage, you're going to see a section that says learn how to day trade, and there's going to be hundreds of videos in there going over all of these topics, everything from mental analysis, risk assessment, all the things we went over in this video in great depth. And I'll do my best to continue to make these types of videos where I go over a bulk of topics. Maybe next I'll do mental analysis or risk assessment. We'll see how this video goes and the type of feedback it gets. So do me a favor and share this with everybody that you know so we can pump up the views and get a ton of hits on this so that I can make more series like this where I master a large brevy of topics from years and years of work. So subscribe to the channel, share this video, comment, like, and tell your friends to do the same thing. That engagement will also help build your mind space into day trading, because you're having active conversations, you're doing things like error feedback, you're engaging in the topics, you're consolidating the information. It's all the founding pieces of how to make information stick. So please go and share this and do all that stuff I talked about. Now, go check out the YouTube page and look at the videos I sent you to look at the playlist, the Learn How to Day Trade section, but also realize I do have a Patreon page where you can sign up for things like mentorship and extra videos and stuff like that. So you can always check out the Patreon page if that's something that interests you. And on the YouTube page, I release more and more in-depth videos for people to look at. So let's quickly go take a look at that. And on the YouTube page, you can see I had stopped developing lessons about 2 years ago and recently just got back into it. And I am now putting these videos up as members only videos. So you can see here that I do have a section on my YouTube page that does have more in-depth knowledge. So if you get through all of the playlists, if you get through everything, you're going to be able to go and you're going to be able to join here, and you're going to be able to go and join on that advanced learning tier to get those exclusive videos that are locked behind the scenes, the information that's deeper and deeper and deeper in my science. And let's just take a moment here to navigate the home page so that you guys and gals can see exactly the best way to get the most out of this. So right here we have what's called the official Chart Raiders launch. That's the pinned video. I have been developing a software or day trading called Chart Raiders that's going to gamify day trading and give people an exchange to trade on. Or I wouldn't say exchange, I would say a platform, a gamified version of day trading. So everybody needs to check that out, because that's outside of learning how to day trade. This is a cool project that I've spent years and years and millions of dollars on to create this kind of video game for day trading. So that's very cool. And then you're going to see everything else here. You're going to see shorts, and the short form content is of course social media and short form content, where I just go through different things where I talk about them in a quick little version, like things like spectator mode from Chart Raiders, or maybe some cool day trading topics, things like that. You're going to have latest and featured, which is kind of the videos that I'm releasing, and the latest releases are the most important ones in terms of featured videos, like this one here, Better Faster Trades, Learn How to Learn. This series was all about learning how to intake information better. This one is called Learn How to Think Like a Pro, Day Trade Smarter. So these are all day trading videos that I do different topics on. These are both mental analysis videos. And then the meat and potatoes, if you look at this, you've got Learn How to Day Trade. We've got the Learn How to Day Trade series here, which is level 1 through 6, which is going to be the bulk of your information here. So if I were to go to this, you can see how many videos on the right hand side here are actually there. Don't mind the ad. Let's skip that real quick. But you can see the insane list of videos I have and the timestamps all the way down here. 149 lessons so far, with more being added. So these easy ones are just 10 minutes each, and this is where you would start at level 1 and you'd continue going through this. You see you get to level 2, level 3, level 4, level 5, and then they get pretty in depth. They get pretty crazy and wild. 25 minutes, 26 minutes, they get pretty crazy. Beyond this, you also have a mentorship files series. Now, if you go to the mentorship files series, you're going to see all these mentorship lessons, and you're going to see the timestamp on these, and you're going to lose your mind a little bit. Hour, 38 minutes, 2 hours and 19 minutes. So I would say go through this playlist first here, the level 1 through 6, because this gives you your foundation of information. So everything we talked about comes through from this level 1 through 6 playlist on this video. So this is what you're mastering first, is level 1 through 6. So you've got 150 videos here. It's no short journey. Once you get through that, then you can go to these mentorship files, because these mentorship files talk about all of that information in great depth. And you can see these are about 2 hours long each, and we have 34 lessons in total. We only have 33 here, but there's one more to come out. And so for the most part, these are an hour and a half or 2 hours long. So there's a ton of information there. Then we have a strategy series. This one is cool because this strategy series just gives kind of like a quick little series of tips on how to trade different things. And these are short videos that are easily digestible. And I would say they're a cool watch for just getting different strategies. Then you have 100 trades in review, which is just other people's trades that I've gone and reviewed and kind of given my thoughts on what could have gone good or bad about them. So these are live trades that I've watched, and just giving my opinion and advice on how I would have done them differently. And then this one here, which is called guides, and this is another really good one: how to become a day trader for beginners, the ultimate stop loss guide, the ultimate risk guide, overcoming fear of failure, learn how to think like a pro. And I need to add this learn how to learn one to that list as well. And that should give you a pretty good overview of how to use the channel, where to get extra content, how you can sign up for more. We also have a Discord community where people talk about day trading every single day. They share their setups, they do all that. Join the community, follow all the socials. I post engaging content on Twitter. I do lifestyle stuff on Instagram. I also have a TikTok that has quite a bit of good short form content on it. There's the YouTube page that has all the guides and lists. There's the Discord community where you can have and build that relationship with other day traders. I think if you do all of those things, devote some time, start with this video, continuously learn it over and over and over, you're going to be on a pretty good path to becoming a professional day trader. And give yourself time, because you're not going to be able to get to be at the level where you're making a crazy income in 3 months or 6 months. I always tell people, give yourself years, and if you break through sooner, then hey, you've done pretty good. And I've seen it where sometimes people become professionals and they make 7 figures a year in 3 months. Now, this is a metric that's not realistic. I don't want to sell anybody a pipe dream. The only thing I would say is everybody has a different path they learn on. We all intake information differently, and I just continue to do my best to be here for my community and all those who love me, and to continue to release these videos. So be easy on yourself. Don't be too hard. Take the time you need, and also focus on emotional development through the development of self, things like self-awareness, loving yourself, taking care of yourself, understanding emotions, things like sympathy, empathy, which one of those two is toxic and which one is not toxic. Is sympathy a toxic emotion, or is empathy a toxic emotion? And if one of them are toxic, which is it and why? Things like this, they grow us in life and they grow us as day traders. So until next time, hopefully we'll see you on the next video. Otherwise, see you on the YouTube channel. Cheers.